Good morning, everybody.
Natural gas futures extending gains up about 5% after the data.
Yeah, hey.
Huge. Nice job, so.
What's going on? What's up, DK? What's up, Luca? Morning, Andre. Give me 1 second here. All right. What's up, everybody? How's everyone doing today? Market is chopping. Market's chopping.
An unparalleled blending of science and art.
Often it is difficult for a person to control a complicated sound synthesizer quickly enough. A computer can take over much of this control work.
Ooh, yes. Oh, yes. All right. Getting situated here still. Because that's just what we do. That's just what we do here. We get situated. Hee Morning, T-Rabbit. Morning, Extro FT Trader. What's up? What's up, Nova? What's up, Mark? What's up, Daryl? What's up, DK? What's up, Chris? Everybody there? Out on the YouTube. Post that I'm going live really quick here. All right. Let's start off looking over here. I'm gonna load my book map up. Load the book map. Ookie dookie. All right, so we started off today with a gap up, and the big point out here today, as it stands right now, is volatility. Volatility is not really letting go. It's not backing off. And you could see yesterday we traded around the expected move for the week pretty much all day. That's the S&P 500. We got outside of it. Sorry, back inside of it, almost to unchanged on the week, came right back to it. Okay, that was the whole Fed announcement. And now today we gapped up, played book right back into the expected move, and now we're trading in and around it once again. This is typical when we come into expected moves to trade in and around these levels. I think it's going to get a little bit more crazy if we really start breaking down through these levels. If we start breaking down through these levels, more specifically the 5,000 level is where we can go retest these lows. And why 5,000? The 5,000 level, from a gamma perspective, right here, it's incredibly important. So this is our put wall. This could act as a level of support. This is 5,000. Okay, so if this gives way, it opens the door. It doesn't necessarily mean traders will reach down further, but if they do start reaching down further, you can get those pretty crazy moves to the downside. So that is our kind of bull camp, the Warriors hanging in over there. We have Apple after the bell. Now, as far as market net flow goes today, it's been choppy. There's been no convergence. We've had a bullish divergence, cross back to bearish, back to bullish convergence or bullish divergence over here between the green and red line, but there's still no convergence. So the market is doing what the market does during these times, and that's chop, or you have a contra move, and the counter move is to the downside while it's like that. Now, personally, I think that this market's being down here at these lower levels, coming into some economic data. Tomorrow we have non-farm and unemployment. This is where things could get pretty spicy, because if the market sees it as bad news, this is where you can break those put walls and so forth. But on the flip side to that, if the market likes what it sees while it's down at these levels, you can get some pretty aggressive squeezes back up to the upside. Now, where to the upside? Well, we're still below a 5-day moving average. It's flat to neutral, so it's bearish, but with caution. If it starts turning back down and trending lower, I'd say to be more bearish. And we're below the week-to-date anchored VWAP. And below, sorry, the month-to-date here too as well. We'll take a look at some of these intermarket stuff. And then we'll go from there. We'll look at some individual names. What's up, 69 Conquer? What's up, Moonraker? Take a look at the book map. All right, so a level to watch for the upside today on ES, which is the S&P 500. You can see as price was pulling up here, right here, what did you notice took place on the heat map?
So at the top they are looking for Mexico data on manufacturing PMI for April. No estimate bar was 52.2. Also getting Colombia PMI manufacturing for April. No estimate there. Bar was 50.6.
So as the market was pressing up higher, filling in this level of liquidity right here,
data on foreign
they
reserves.
added some more above us. Right here, you see how it kind of got deeper red, darker red, and then got a little bit thicker here too. So the bigger level to pay attention to the upside today as it stands in this current moment, 50.75 to 50.77 right here, okay? So if markets can come up here and fill this, right, that'd be a positive sign. We're seeing a little bit of a bounce here. So that would be the kind of overhead supply, okay? Right, markets are just, they move between, it's an auction, right? You look periods of supply and areas of supply and areas of demand, all right? And when there's not enough, when price is below a level of supply and there's not enough demand to drive it, well, that means it's going to go down to look for where their buyers are. So speaking of where buyers are, to the downside, we have not really 5,000 has some levels there, and I think that'll grow if the price does come down. But this level is still just hugely of interest over here. 49.60, there's 2,500 contracts down there. And it's been there now for 11, 12 days, right around there. The longer we're there, right, if supply starts to outweigh demand, I mean, this would be a level to pay very close attention to. It doesn't mean it has to bounce from this level. Sometimes you could get, once it fills, you can get these flushes and then maybe turn around. But that's where you want to see where price, if it can get constructive, if it were to come down into those levels. So we have down here, and I don't know if that's going to reach today, right? That's a pretty tall order. You know, don't rule it out. I mean, we've seen 100-point moves in the market, but given the context of market net flow right now, it's not really suggesting that type of move. We'll see if that changes throughout the day. And now to the upside, right, even further, Matt Ryan had called out, even up here at 6,000, there's been a lot of orders up here. Now that's way up there, right? But 557 contracts. I don't think we had to put too much weight on that one yet until price moves through and around some of these key levels. But that nonetheless is something that we could just kind of monitor and watch to see, because you know there's some big orders up there. It's Dave the Contrarian's orders up there at the 6,000 target. Oh wait, no, he moved it up to 7,000, I think. Those are actually Moonrakers. What's up, Oscar? Yep, it's an auction process. All right. Okay, let's hop into Thinkorswim. The Thinkorswim platform. S&P 500 right now. It's just trading around its lower weekly expected move. We're kind of we came down to it, we bounced up from it. Now we're kind of moving in and around. I have a little trade on intraday Let me try to load it up. I have to do it through my phone right now. So I'm like trying to figure this out. Played outside of the expected move. Now, as far as like where price can potentially go today if we get more bearish, if I bring up the 0-date levels, early in the morning, it identified over here 5,049.95 was a pretty key level. So if we do get continued sell-off, pay attention into these areas, right where the kind of the put wall is obviously at. Okay, but these were some 0-date levels too, and if traders continue to reach down here, they could be telling us like, reaching for protection or reaching for a hedge or whatever the case may be, to see if price can come down into and around these areas. But 50.25 was also a key level from a 0-day perspective. It was actually the put wall from a 0-day perspective, and that can act as a level of support. So it's still there, right? So here's the 5,000 and the 49.95. Here's the 50.25 where kind of price is in and around now, and then you have 50.50. Okay, so we're above 50.25, so that's holding. We got outside of it a little bit, right? On factory order data or shortly thereafter, and we saw this flush a little bit after that. It kind of freed the market up to move, and now we're holding above 50.25. Here is 50.50 right here. Let me see if it'll update actually. All right, what's going on over here? What's up all there over at TikTok? Hello, hello. Thanks, TJ. Yeah, I don't post many videos there on TikTok anymore, and I just recently started going live. I might start posting more short form content. I've just been a little bit busy with some live stuff, obviously, and I've been a little bit more focused in on the YouTube, Twitter, or X, or whatever it's called. Okay. Okay, so here's a little bit of an update on, why doesn't it show me the flip line? I hate when it does that. There's the flip line. Okay. And we're still in negative gamma territory. The flip line's up here at about 5102. Yeah, 5102. Okay. What does that mean when we're below the flip line? It means we can sell into selling, buy into buying, and we see these pretty big rips, both directions, okay? So the market right now, it's at a standstill, right? And this could be because why? It could be because we're going into some big macroeconomic events tomorrow. Non-farm, unemployment, ISM. So we'll get those expected moves later. And then we have Apple earnings too. So leave this, I mean, as it stands right now, the market's wide open. Now, we started the day at the daily expected move for the SPY. You can see we actually opened, boom, right on it. 504.11 was the daily expected move. If you don't know what those are,
lower income consumers are still under a lot more pressure.
These are the implied moves. These are based off of implied volatility. Okay, so these aren't just levels on my screen. Hey, it's support. Hey, it's resistance. No, these are actual, factual, mathematics levels driven right here based off of what's going on in the options chain. And we get these at the end of the prior day close. And it tells us what the risk is for the next day. So you think of these in terms of a distribution curve, right? And as far as a distribution curve, and it'd be one standard deviation, right? And then you go out 2 standard deviations, but remember, there's a higher probability, right, that we tag one of them, but we close within the expected move, right? There's a 68% probability. So you can, knowing that, it doesn't mean, hey, it's support, hey, it's resistance. It means, even though that it acted kind of like as a resistance level, it tells us, it gives us more of an idea, is a bigger picture as far as the risk goes. And that's the only thing that we can really control in these markets, right? Is, what we buy, when we buy it, how much we buy it, and then when we sell it, right? We don't control where price can go, right? But there's 4 things that we can't control. And if we have a better picture of risk, it really does help out, right? Pro trader is not a thing. Pro risk managers are a thing. All right, let's hop in now and look at some of these Getting some orders over here. Getting a little bit of a supported bid right here. There's 566 contracts, kind of where just as it popped through the daily VWAP. That's a positive sign if these actually levels can hold here. They hold the daily VWAP. Okay, that's a good sign. As market's kind of pressing up a little bit here. Okay, let's look at some of the big dogs. We'll take a look at Nvidia. I'm going to keep an eye on these chats here. I'm not on the phone, Don Pablo. I'm not on the phone. I have to manage some trades through my cell phone right now, just because of how my setup is currently. Kind of annoying. Okay. All right, so Nvidia, we'll look at the 15-minute time frame. We're below a 5-day moving average, but it is rising, so it's more like bearish, but with caution. Caution being that we can rip right back up. And you can see we kind of have this little cupping pattern right over here. Price action is getting coiled up. So Nvidia, right? The market can't go down really if Nvidia holds itself together, right? So the entire move in Nvidia, this move was the market move, right? Nvidia's big old blast off right here, everything moved with it. Nvidia being, one of the largest market cap names, right? Let's go market cap right here. Nvidia is the third largest market cap name, and it's literally about 500 billion away from Apple, from taking Apple, Nvidia. Now, the majority of people know what Apple is. I wouldn't say that the majority of people know what Nvidia is, right? If you go to your, grandparents or your parents, just to be like, hey, or whatever, you'd be like, hey, do you want an Apple phone, or do you know what an Apple phone is? Yeah, I know what an Apple phone is. I know what an iPhone is. Do you know what an Nvidia graphics card is, or a semiconductor? No, I have no idea. Maybe they've heard about it, be seen it on CNBC and so forth, but it is interesting to see that is the third largest market cap name, and it's a stone throw away from being number 2. Microsoft being number 1. So overall, on Nvidia, right, this was the day, go back to the videos from this specific day, this very day, we said this right here, it doesn't necessarily mean it's a top, but a big day, reversal day like this with big volume means that we can go through a period of consolidation. It could be a long time, right? We could even see it rip up to 1,000, we said, and then come right back down, and it could go sideways. And this is exactly what happened, right? That was the insight.
Down from 50.6 prior. Mexico manufacturing PMI at 51.0, down from 52.2 prior.
Yep. So now as it holds, right, if SPY is pushing, by the way, that means Nvidia is pushing. So Nvidia is breaking through this tiny little pivot right here on the 5-minute time frame. So we're being the next level of supply. It'd be right up here at about 850, 852. Okay, so if the market's going to move higher, Nvidia is going to be moving with it, right? This is the 5-minute time frame. Let's go into a 1-minute, gives us a little bit more subtleties. So you can see if SPY was pushing, right, and look at the volume that came in right here on Nvidia, right? So you get this little kind of bottoming pattern, tight consolidation, and a breakthrough higher. This is where some of the supply is at. So right in and around this area.
Technology fee to iPad OS apps starting in autumn.
This level right here that we identified on Bookmap still holding up rather well. And then we're pushing into the month-to-date anchored VWAP, into and around there, potentially back up to the daily expected move if we continue to see this push. And we still have a bullish divergence. And what I'd like to see here is that convergence is waning. So this gives us insight that if we start going to a positive convergence,
key services subject to EU technology rules.
Positive convergence will tell us that we can get a potential push higher here in the S&P 500. So we're up about 0.5%, almost around 0.5%. I'm in a trade in and around the lower daily expected move from today for a day trade. So I got to check in on that really quick. So give me a moment. And I'll tell you the reason why I took it too, because it's not like hey, he bought into that, and that it's not like that all the time. Right? It's not like that all the time. I'm up about 400. the reason why I took a trade into that is because look at the aggressive nature of the move through that level, right? So I'm well aware of being in negative gamma territory, selling into selling, buying into buying. And as we came through 50.25 into the lower expected move for the week, it was a very aggressive move. So it was literally just a fade. It was fading this price action for a potential bounce. Now price has to digest, right? As we're at 8 a.m. or 8, 9 to 11 Eastern Standard Time, we're going to be moving into lunch hour, and you typically get volatility in the early trading session, and then towards lunch hour it kind of dies out. Volumes dry up, picks up more towards the end of the day. Where can price go right now? I'd be paying attention to 50-50 on S&P 500. I'm looking at the Owanda chart. You can potentially pull that up here on CBOE, I believe is just SPX. So most people look at COBE. I just look at the other one for its continuity. So 50-50 would be up into and around right here. Not too far off. Okay. But here's the thing. We have all this supply overhead. All right, so we're seeing a little bit of a bounce here, but really kind of just a lot of chop still. Like we're not getting a clear divergence. We're actually, this is coming in, and actually puts are coming out, are coming up.
Reporting first quarter revenue, 4.14 billion Danish crowns.
Give me a second.
It's a 3.8 billion expectation. GenMap affirming their fiscal year revenue guidance.
Sorry about that. Thought we were having a panic attack here. I thought our child was choking. I thought I heard my name being screamed. Overreaction. Fun times. Sheesh. Hey, what's up, Ruben? No, I don't trade options. I trade the equity itself. So I don't play straddles. I used to buy like calls, puts, and some spreads here and there. But the bulk of my trading now it's down to just really the equity, the aspect of it. And really, honestly, the reason why is just because, shoot, I mean, it's just what I've been good at. There's nothing against trading options, obviously. Well, options are a risk management tool, right? They're an amazing tool for risk management if you actually utilize them how they're supposed to be utilized, right? As a risk management tool, not a YOLO tool. Okay? All right. So we're just coming around. We're just consolidating up here in and around this area. Anybody want to pull up some individual names right now that we can pull up and kind of analyze? So we pulled up Nvidia. We can pull up Microsoft. Microsoft's obviously a big one. And Microsoft, let me just tell you, these last two closes on the S&P 500 have been just absolutely bonkers wild. And, you know, if you don't understand why it's important to understand where negative gamma is, just look at the last two closes of the S&P 500. Could very well been CTAs, right? CTAs are commodity trading advisors. They're algorithms. They're momentum traders. When they hit certain levels, they sell. They don't think, they just do. They act and they dump a lot or they buy a lot. Now the CTAs, I can show you a model, and they've come off a lot. So we can give some systematic flows CTAs, pull this up. But we were up here, right? And what have we been saying up here? They're max long, and the entire time while it was max long up here, practically max long, the longest it's been in a long time, we said if we started hitting some key levels, you'll get some downward convexity. Downward convexity means you'll start hitting those triggers, boom, 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 and you'll get selling into selling into selling, and that amplifies when you're in negative gamma. The key level that we talked about on a prior video was 5100. It was up here, and I think when was it? It was like this day or something like that we talked about, and we cracked through it. Boom, CTAs like this was into the close. That's wild, right? And this was into the close. That's pretty wild. All right. You zoom out further. I'm going to show you something. If you think you know what the market's going to do, rethink, right? Rethink yourself, because you don't. This market is volatile right now. Look at these swings back and forth. Boom, 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 right? But then they're followed by big upswings. Boom, 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 right? And this is where people really want to start putting on a lot of risk for some weird reason. Like, oh, they see these gigantic moves. They're like, oh, I should be in it. I should be in it. And then it flushes on them. And they're like, oh, I'll just buy back in. And then this is where people get really chopped to shreds. As we've been saying, all right, we're coming in around these areas up here. So we filled that liquidity there. We still have 50.76 above us. So this would be kind of the ideal area. So if price can push up here and actually fill it, right? If we can get enough demand to drive price up, we'll see what price does here. Because once we fill all of that, are we still going to have buyers? Is demand still going to be there, or is it going to consolidate and kind of work itself up? What I like here is that we actually have supporting bids driving the market up higher. It's not like it's like the deep blue sea over here. So if it starts turning into the deep blue sea, watch out, because then price, see how it's kind of moving itself up? It means we have support. We have bids, okay, coming in. Now, if they drop out, right, as we fill this and there's no more demand, you're gonna have some sellers step in, and it kind of just could pull back in quite easily. Okay, so coming into and around that area, I'm gonna actually clip some of my position off. So give me a second here.
Biden's and college protests put to the test the rights of free speech and the rule of law. Both must be upheld.
Connect. All right. So yeah, I'm up approximately
Your civil society and order must prevail.
around $600. And I am going to sell out a half of this position. A little bit more than half, actually. I mean, if I can get this freaking order in. Sell. There we go.
Biden saying that peaceful protest is allowed in the U.S., but violent protest is against the law.
Okay. All right. So I sold basically about 70% of that position. All right. 70% of the position. I'll leave a little bit on just in case if we want to continue ripping up. Okay. So there you go. Very simple trade. What did I do? I just faded the market. I faded the market as we're coming back into 50-50 now. The fade made sense. It was so aggressive. While it was aggressive, it was positive convergence here as the market was unwaning here, and we were going into the S&P 500. Under and around the daily. I didn't connect perfectly like to the low. I got like right in around this area, and then I think I scaled a little bit more in because this kind of aggressive move with the positive convergence that we were seeing, I just felt like we were going to get a bounce, right? As we did all throughout the other day too. Okay, and that's what happened. We're coming into and around that 50-50 level on S&P 500 right now, or into and around it. So just be aware that these can press price back down. And if you're looking at Bookmap, they're actually adding supply. Do you see how it just extended here and extended here? So as price is moving up, more supply is being added here. So we need people to start driving price here. We want this to get filled. A lot of the times after a strong move, you can see price pull in and kind of like try, maybe do something like that and digest before it tries to like get more steam to come back in, right? Markets move between expansion and contraction. We expanded, now we're potentially contracting. Thanks, Ruben. Hey, Ruben, is there any way that you can resend that email, by the way? I let some of the emails in my inbox go away. I just focus more on like some of my DMs in my Patreon. As far as like, I just haven't went through, and I don't know, or maybe I can search for it. But so I can recheck it because I said that I was going to look at it, and I got way too sidetracked. This last week has been kind of wild for me. Last couple of weeks. Dang. All right. Let me take a look here at some of these chats here. What's up? What's up, Raul? What's up, Sparks? What's up, CJ Beats? We'll look at Dell. Okay. $3 to $4 ring back and forth. Yeah, these are some big moves. I'm up at 6. How's Twitch doing? How's everyone over there at Twitch doing? How's everyone over here at TikTok doing too? Rise and grind. Let's make that money. Hey, what's up, Carl? What's up, dude? I just noticed you the TikTok chat. There we go. It's so funny to me that like I go over to my TikTok chat and that's where like, you know, my buddies are. They're never over at my Twitch or my YouTube stream. No, but they'll pop into my TikTok stream. The TikTok stream is kind of funny because I have it set up a little bit differently, right? So it's vertical view. So the scenes, they look a little bit different than what you might see here. We'll razzle dazzle them. So the market's moving up. All right. So currently we're moving up here. And what we need to do is fill all this liquidity up overhead. So we're in our rocket ship, hopefully getting there. Now, if the price were to come way down and we start to sell back into, which is a possibility, back into and around the daily expected, weekly expected move, which by the way, we're actually coming here. We're right at the month to date anchored VWAP again. But if we come back down, we're going to have to change it to being at the bottom of the C. Okay, we'll be down here, back again, under the sea, underwater, in the SpongeBob home. Moonraker from the Twitch chat recommended that I do this for the bearish days. I know we had the red submarine idea, but then as soon as I heard the pineapple under the sea, I was like, that's hilarious. That is hilarious. Who lives in a pineapple under the sea? God, TikTok is weird though. Like this guy just came in here. First time looking at you. What's your deal? How do you make the world better? This this like random no image. Like dude, like people are so weird. It's so weird. TikTok, man. I swear there was one weekend where I gained 80,000 followers on TikTok. That was like a while ago. And I haven't posted on there for a while because it literally just seemed fake. Like it was all bots. It was like everything was fake. It was fun for a while and then I just stopped posting there. Hey, good morning, Doppler. We're just hanging out under the sea right now as the market's kind of doodling around. Let's go back to my desktop. Anybody reading any good books? I started this one. I don't know if I necessarily am a huge fan of it yet. It's something a little bit different. It's called 10x is easier than 2x. It's about focusing on specific things. I'm all saying people are weird while I'm in my SpongeBob house. People are so weird. The irony. The irony. Is that the right word? I'll bring you to my library. This is the book. 10x is easier than 2x by Dan Sullivan. They've written quite a bit of books. I'm still going through it. You know, it's like I guess it just gets you to focus on the right things. But I'm not I don't know. I don't like a lot of fluff. I don't think this is a lot of fluff. I think there's a lot of good stuff in here. But I almost feel like you can just get like the Cliff Note version and it's going to be stuff that you understand and maybe like a few like tidbits, right? A few tidbits in there to get you to help think differently about approaching situations. So that's what I'm kind of reading through right now. All right, we wanted to see, some people wanted to see Tesla, so we'll pull up Tesla. This is what the market's doing. The market pulled up and we're doing kind of what we said, right? Consolidating, digestion. We didn't pull down into the deep blue over here, so we're still holding up. Let me obviously go back to my screen. Holding up, but just digesting over here. Maybe gaining some momentum before we can potentially fill this stuff. All right, if we don't get the buyers to come up here, I mean, supply's gonna outweigh demand and we're gonna come back in a little bit. No, compress. It's not relevant. But you can stick around and learn for yourself. Exactly, Nova. Yeah, I could tell him what I do, but obviously he could kind of figure that for himself. You never want to approach this like a conversation. Like you would never approach a conversation like that in real life. Right? No one. It's only online you would approach conversations like that, like with like just weirdness. Okay, let's take a look here at Tesla. S&P 500 still doodling around here, but it's not selling off. Okay, so we're consolidating this move. Wow, remember? Expansion leads to contraction. Will contract. 50-50 is still up overhead. Okay, let's hop over to Tesla. A lot of people have been mentioning Tesla. In order to look at Tesla, we need to hop into the car and drive over to Tesla. All right? All right, so we're over here in the Cybertruck. Now, Tesla's been a dog all year, right? Dog all year, and then all of a sudden we get some couple of news, right? The earnings, right? We popped up higher for, whatever reason, and then we popped up again based off of some news out of China. Now, what is happening here is important to call out. We had a big, strong move. I don't know if anything really changed from a fundamental perspective and or a trend perspective, so you got to keep that in mind. But powerful earnings move, follow through, and now you have price pulling down. And what do you notice to the left, on the volume over here? You have volume drying up. So price action moved up, expanded, now it's contracting. So this right here could be setting up a flag, right? So we kind of identified the 15-minute time frame over here, and it's kind of getting chopped up with the rest of the market. But as it stands right now, I'd be watching this trend still, lower highs, and we're back below a 5-day moving average. Now right here doesn't look all too great, where you have this kind of move to the downside and price action's contracting right here. It could be flat, bear flag. So perhaps we do go down further. If we do go down further, you can look at the volume shelf profile. The main area would be 150 over here, but you do have, a little air pocket back into 170, even down here to 160, 65 area. Okay. So if price wants to break down further, come into these areas, doesn't mean it's down and out. It means that you want to see if it does going to pull back further, volume to still continue to dry up. Okay. And it could still be setting up for a potential pop right back to the swing high. Now, I want to show you what I mean, right? Target, we did this same trade. It gapped up, pulled back on declining volume, and then we saw this breakout of the prior high, and we played that to this swing high right there, okay? That was that trade. I used that as an example. I used Disney as an example. It was the same thing we did. Disney broke out, we consolidated, and we played from here to here, and then it reconsolidated. Boom. It's even consolidating again over here. Look at this. Okay. And it got above this high over here. So I mean, even Disney. Another one that's been kind of on the radar is Celsius. Celsius has been on my radar. Now, Celsius has earnings coming up, and I don't like to establish new positions, unfortunately, into earnings, but it does. I mean, this is a pretty clear trend that if we start breaking it, maybe this opens the door for a pop higher here. Earnings is around the corner. Next week, I believe it is. Yeah, next week. Yeah, sure, yeah, sure. Uno momento. Doppler wants to see WBA. Let's pull up WBA. What does the volume profile look on SPY? We'll pull up SPY here quick. We'll pull on the 15-minute time frame. 15-minute timing. In the last 10 trading days, the main point of control would be over here at 505. We're going to round up. Okay. Price action still consolidating here, flagging out, and what's it doing? We're actually we're adding supply up overhead, and it's kind of clearing up over here. So it's kind of, in a way, this is to be expected. All right, to be expected. Market net flow, positive convergence. So this is good to see this divergence here, and then the positive convergence, which tells us that there is still a probability that we're just taking a breather and we can go for it. Okay. Now, are we going to get some sort of liquidity break? Perhaps, maybe, I don't know, right? Because we keep on getting supply added overhead. So we want to pay attention here. I mean, it's waning a little bit, but it is positive in nature over here, right? The cumulative net premiums of calls versus puts, they are diverging. This means that, you know, it's easier to trade to the upside with you when you have convergence. It's easier to trade to the upside. You buy those dips. And we're dipping right now. Could be setting up for another entry, actually. I'll pull up WBA. Give me a moment here because I want to pay attention to this. DKNG is reporting earnings after the close. 50-50 is the put wall. Okay, so 50-50 would be that level to watch. If we can get through these, shoot 50-60 and 50-75. Yeah, they're still adding up over here, overhead. So we're looking for demand to step in, but we're actually getting more supply overhead. That's fine, because you know, see how we just got added more here too. Did you see that light up? And they're moving it down here too. It's okay. It's fine. It's just we need to see some bulls step in. Yeah, they're light. Look at this. They're stepping it down actually right now. Do you see them walking it down? Hopefully you just saw that happen in real time. That was pretty cool. That's who you're trading against. Those are definitely algorithms. The way that they move, you can tell. They're like... See, that just got pulled and added. Yeah, do you see they're shifting it down? Do you see how they're stepping this down? Careful here. Careful here. They're walking price. Yeah, it's clearing up down here too. So it doesn't mean that we're down and out. It doesn't mean that. It's just we have to get through these levels and we got to find some sort of buyer. So, you know, this turns into the deep blue sea over here and we don't have any buyers. And then you have all the supply, they're just walking price. Yeah, I can check at Dell after the WBA. I'm just seeing if something sets up here for us. Maybe back into daily VWAP. Still positive convergence here, positive divergence, but it is waning. Okay, going down here, and we're getting hung up over here. We're coming down to the low of the last 15-minute candle as price action is breaking down here a little bit more with supply being added overhead. All right, so so do you see how important it is to see that stuff, right? You know, supply and resistance, or like you know, support and resistance wouldn't have showed you that happen. You have to look at the order book to see that stuff happen in real time. Hopefully that shows you the value of something like this. Knowing this, right when we saw that, we say what? Well, you don't go long here. You don't go long. Now, if I didn't exit my position or some of the position, over half of the position over here, I would have done it right when I saw this. Now I'm looking to see if we can re-enter at some point. So Kurt, this is a heat map of orders. So the darker the red, the larger the orders, the larger amount of orders. So as I saw this step down right here in real time, that is pressing supply lower. It's walking price down. Now what we'd like to see is like price to move up and all of a sudden a big bid to come in. Like how we saw on the move up, we saw this bid come over here and start pressing price higher. Now you can see they're adding supply again. They keep adding it. So there's more supply than there is demand. So price looks to see where there's buyers. And there's, I could go into micros, right? I could go into the micro-ish tick chart, right? And I could show you even on these little time frames. Like I can show you boom, boom, boom. But I just look at I kind of key in on the bigger levels. Now I'm all messed up here. Okay. So that was into and around the daily VWAP. On a TikTok, dude. I can tell you don't know what you're talking about with that with your comments. No DCF analysis, no perspective catalyst.
BuzzFeed BZFD announcing 1 for 4 reverse stock split. Bravo Zulu Franklin Delta.
All right. Doodling around the S&P 500 daily volume weighted average price. All right, let's pull up some of those charts that everyone wanted to see. You said WBA, and then you wanted to see, what was the other one there? I mentioned it over here. Let me see. Dell, okay. So WBA, Walgreens, I mean, this is, we're in a clear downtrend, but I will note that price action is getting very tight here. Okay. So completely beat up, obliterated, horrible trend. My guess is that you're trying to play for a bounce. Okay. If you're trying to play for a bounce, I mean, we're 1 day separated from a 52-week low. All right. So you got to be very careful here, but you can see price actions getting pretty tight. So if you are trying to trade this type of stuff, be mindful that if it starts breaking down lower, your risk, right, would be a crack of this low. If it cracks low, then you look for a U-turn to turn back up. But we're in a clear downtrend. So this type of stuff, right, I look for strong stocks getting stronger because weak stocks typically get weaker. That is how it is, right? If you thought this was the low over here, well, you were wrong, right? If you thought this was the low, you were wrong. If you thought this was the low, you were wrong. If you think this is the low, right, there's a higher probability that you're going to be wrong. It doesn't mean you can't bounce like this. Kaboom! But even that big bounce, kaboom! Where we did it was still in a declining trend. Lower highs, lower lows. Okay, so you go into the 15-minute time frame, a bunch of chop. It's under a declining 5-day moving average there too.
2.91, drawing 5.275%, 33.5% a lot at the high, and the 4-week bills.
S&P 500 is breaking daily volume weighted average price. So this whole step down right here was a huge insight for us.
8-week bills drawing 5 spot.
Look at this thing price move down.
7.8% left the high bid to cover. 2 spot 99 in the 8 weeks.
Still above the weekly expected move, but I mean, this, just keep watching here. Just careful up in this area. These aren't necessarily dips that I would want to buy right now. You have still a beautiful divergence here. The price is coming in a little bit. So once again, this could just chop right back up. Like, I would not rule it out to see a snapback, but just be aware that there are active sellers in this market right now. And we literally legitimately visualized it in real time right here. Okay. So now what we want to see buyers
trading for the
step
day.
back in.
Let's see, ending up 0.6%. The CAC down 0.8.
I think we're ending. Somebody had mentioned the DAX, but we're coming into I believe the European close right now. I have my clock up. Flipping Krabby Patties back to the pineapple under the sea. Euro USD, yeah, I'm not trading Forex right now. I'm not trading currencies. But yesterday's video, if you want to see an in-depth analysis on like USD JPY, we went through that. This platform is called Bookmap. Thanks, Austin. I appreciate that. Take a look at MasterCard. Okay, so yeah, let's pull up Dell and then we'll pull up MasterCard. All right, so here's Dell. Dell is strong, right? Dell is one of those ones that are in an uptrend, and I played it out. I think I actually played it over here, more specifically. I think I traded over here, but then I got chopped out, and then I re-entered, and then played it up into here, if I remember correctly. And then price consolidated again, got tight, and we broke out, and now price is kind of consolidating here. So nothing actually has really been broken here. We do have a lower high, but we're being, they're following, right? This is what a triangle is, right? A triangle in the market. It's just all patterns. They just highlight expansion and contraction. All patterns, right? Falling wedges, rising wedges, flag patterns, bullish consolidations, head and shoulder patterns. It's just showing a higher high, higher low, or into a pivot area. It's price contracting. That's what they are. Okay, so if you get good at identifying contraction, you don't really need to worry about all these names that are honestly, you can call them whatever you want to call them. It doesn't matter. It ain't going to make you a better trader. It won't. Okay, you pay attention to the contraction, and you could also pair that with volume. That makes a huge difference, and trend, right? That's taking price, volume, and volatility, the three most important aspects in the market: price, volume, volatility. That's it. Okay, so I'm saying this because price action is contracting. We have higher lows, boom, 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 and we have lower highs, boom, 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 boom. Okay. So we have a fight between the bulls, the bears, and they're kind of working itself out here. So what would I like to see? I would like to see this actually get tighter into this pivot and then break this swing low to come retest the swing high. That's what I would like. Contraction leads to expansion. Thanks, Tease. Can I slowly explain the divergence on the net flow chart? Yeah. How can I do this easily? Because I explain it pretty frequently. This net flow chart. Okay, so if you are day trading, this right here, if you're not looking at market, first let's start off there. If you are a day trader, this is a tool that you need in your tool belt. Because I've seen too many times that like people fight, they try to buy the dip when they shouldn't be buying the dip, and they're selling too soon before they should be selling. Okay, market net flow tells us whether or not we have just a very clear edge to be trading with the trend of dealers. That's what this is. And you can technically use this for multiple days too, but I'm just talking about it from a day trading perspective. Okay, they have a green line, a red line, a white line. The white line, it's just the price of the S&P 500. That's all that is, okay? The green line is cumulative net premiums for calls. The red line is the cumulative net premiums for puts. Not important to understand. You can go into what that means, how they calculate it, because there's other sources like a hero indicator. They do it. I just use this one. You can read more into it of what that actually means. If you want that kind of like higher, but you got to explain it from just a very basic, well, how to read the indicator itself. Like for example, a lot of people know what the RSI is and how to use it. Very few people know its calculation and what it actually is doing, okay? The MACD, a lot of people understand the bullish crossover, bearish crossover, and they can use the tool effectively, but they don't even know what the moving averages are within there and how they're being calculated and what they're looking at, okay? So if you want to understand it, you could go dive deeper into the understandings of that so you can explain it at a deeper level. Awesome.
Responding to Turkey
but
announcing
it won't make you understand how to trade better, unfortunately. That's just the reality of it, right?
Agreements by blocking ports
you can be
for
super
Israeli
smart and
import
still fail,
exports.
right? There's a book written about that, quite literally, about long-term capital management. It's called When Genius
Will work
Fails.
Great trade alternatives,
Super smart people
focusing on local production
blew up an account.
and imports from other countries.
Blew up more than an account. Blew up a lot. Okay. Cumulative net premiums for calls, cumulative net premiums of puts. When they spread apart, that is a divergence. They're diverging from one another. Right? So you can see they cross over sometimes, they push away from each other sometimes. When the green line is above red line, that's obviously, bullish because green, go, right? Green, go, bullish. Red above the green line would be bearish, right? Red above green, right? The red's above, bearish, right? Convergence, all convergence is over here is their proprietary indicator, right? And it tells you if the S&P 500 is moving with the flow of the market. For example, when it is gray and you have a bullish divergence, right? Green above red, it's gray. It means that the S&P 500 is not moving with market net flow. And when it's not moving with market net flow and it's gray like this, it tells us specifically that there's no edge in this market as it stands. Okay? And then you can see they were actually heading down. This was going up. It crossed over a bunch of times. So you'll know when it's a very clear edge, very clear on both bearish and bullish side. All right, we started losing convergence here again as the market started selling off. So when you go gray and you have a bullish convergence, you typically get contra moves, right? Market can pull down. When it turns green, that means the S&P 500 is starting to move with market net flow. So see how it started waning over here? It started being less gray, and then it flipped, and then the market started moving up higher, right? This is where the edge comes in. So that's the explanation. I mean, I think I can go a little bit more deeper into there, but yeah. All right, so we're kind of stabilizing ourselves over here for the meantime, just like we did over here though, right? We rallied up, we consolidated, they stepped down. Now we're getting a little bit of supported bids over here as it's kind of going sideways. As market net flow is not giving us much right now, okay? No edge. We pulled off and we're trading around the daily volume weighted average price. Yeah, right now it'd be more sideways than anything. It's not a clear look. What's up, B Alpha? Thoughts on the Treasury buyback and macro outlook? Well, they cut it. So Jerome Powell was out yesterday, and the dovish response, the move that we saw over here, was about doing less of tapering, right? So the market liked seeing that for the most part until it obviously faded again. But overall, there was some pretty hawkish remarks. As far as kind of the macro outlook goes, I mean, I think the biggest thing, and I think people are starting not to pay attention to it again, is the yield curve being inverted. And I feel like people are like, oh, it doesn't matter anymore. Well, it's still inverted, and we have not seen it uninvert yet. And it's going to uninvert at some point. It will. And it'll probably happen when he starts cutting rates, effectively cutting rates. So let me show you a chart that really depicts the picture of what I'm trying to explain here. Still watching the S&P 500 kind of go sideways. I still have a little position in. I may or may not cut it here. In the near future. I gotta remember that I have a position on. Sheesh. Okay, give me a second. I'm going to pull up this big picture chart. I've shown this many times, and I feel like this is a very good visual. Ollie, no, there's not a way to see the convergence. I'd have to repost it when I'm available, so you can always tag me and I'll try to post it. It shows momentum, and momentum is just a different proprietary thing. But you can really just look at the price of SPY and if it's moving or moving without it, and you know, kind of go from there. But yeah, it is just the momentum, which is another one of their proprietary indicators of it. But yeah, I can always post it. You know, if you tag me and I'm by my computer, I'll post it in the Discord. Right, I have no problem doing that. Give me a second here. Thanks, Ruben. Let me see. Come on, where you at? There we are. Default. Why are we in the default? Okay. And I think a lot of people forget about this kind of stuff because, you know, a lot of people are like, we're at all-time highs, you know, which we're not far off all-time highs. This chart right here is showing you the 10-year 3-month yield curve, which I've switched it to the 10-year 3-month is because the Fed said that was the Fed, basically the Fed staple. That is the important yield curve. And go back through history, like look how inverted this is. Like you can go back earlier, right? And we've seen some crazy inversions of this. But this is a long, long time to be inverted. And this right beneath us is the federal funds rate. The federal funds rate is right here. I'm going to hide myself for a second here. Give me a second so you can see the screen better. Okay. Actually, I don't need to hide it on TikTok. It doesn't matter. I'm just going to hide it on both. Okay. So the federal funds effective rate over here, you have the yield curve, and then you have the S&P 500, okay? The pink lines are highlighting new all-time highs during a period where we have a yield curve inverted. And this is dating back to the 80s, right? This is, I think the long-term capital management was right. No. That was the 87 crash. I think this was long-term, or maybe it was prior. I can't quite remember. I think maybe that was long-term capital management over here where we talked about when Genius failed. I can't remember. I'd have to pull it back up. I don't remember the date. Okay, besides the point. Right. What's the economic outlook? Well, we haven't seen the yield curve uninvert, and we haven't seen them start to drop rates again. All right. And what do you notice here when the yield curve uninverts every single time? Yield curve uninverting. Okay, we're not there yet, and then what happens? They go through a rate pause, and then all of a sudden when we uninvert, you can see they're lowering rates. We go through a rate pause. When we start to uninvert, rates are coming down. Uninvert, rates are coming down. Uninvert, rates are coming down. Rates, they're saying, as it stands right now in this current moment, what are they saying? What are the probabilities of Fed Fund futures telling us? The probabilities of Fed Fund futures for a rate cut? Oh man, actually. So it's shifted actually, interesting. Back to September. So one rate cut for the remainder of the year. Now, this is going to be highly dependent on data that comes out. That's what Jerome Powell said. He says he sees no stag and no inflation.
Expectations, uniform. Michael Golf.
Okay, so one rate cut. So it looks like, hey,
Q1
oh my gosh.
Music subscription revenue up 10.7%.
It looks like from a probability standpoint, they're saying, yeah, we'll probably get a rate cut this year. Okay, whether that's, you know, in September, November, December, we don't really know yet. And we don't even know if it's going to come because it's going to be dependent on the data according to Jay Powell. All right. But the reason why I find this to be interesting is because everyone wants them to start cutting rates again. But if you look back through history, when we start cutting rates in a very deeply inverted yield curve and the yield curve starts uninverting, what did we see happen? We saw all this turbulence in the market over here in the 90s. We saw the dot-com bust, bubble pop, boom, and we saw the great financial crisis. You can even go over here to the pandemic. We started raising rates, right? Going through the rate hike cycle, the yield curve started to invert, and even inverted again going into and around the pandemic. Okay, this is more of a one-off situation here, but then they slammed rates down, quantitative easing to the max, boom, we started flying. All right. So what happens when we start cutting? Are we going to hold them higher for longer? Is it going to be a slow cut, slow burn, or is something going to break, or the yield curve going to invert, and they're going to have to slam rates down again for whatever reason? Now, this is an election year, and I'm pretty positive that this was an election year over here when we saw the crash, and this was an election year over here too. I don't know if the Fed's going to be, I mean, they say that they're not politically driven, but, you know, whatever. I mean, you leave that up to yourself to decide. I don't really know. Yeah, with high inflation, high oil prices, right? Oil's coming off a little bit these last couple of trading days or so. It probably is bouncing right now, I would imagine. So let's take a look at some of these intermarket assets that give us insight to this stuff. Yeah, so oil is still coming off here, still following through to the downside. So this is actually helps his case of inflation coming down. Right now, I'd still think that there's potentially a trade here, but it hasn't shown us strength yet. So if oil comes off, typically the 10-year yield moves with it very closely. So we'll look at the 10-year yield. And the 10-year yield today is it's up a little bit, but it's coming off the highs quite a bit. So as this was coming off here on, you know, probably the factory orders report, whatever, you know, came out, it caused some macro moves. CL, right? CL probably came around the same time, starting to fall off too, around the same time. They moved pretty closely, which means, oh man, actually I got to check my XLE. I don't have an XLE, I have another one. Yeah, XLE is up about 0.5% on the day. So it's kind of faded from its highs. It's just floating. It's an inside trading day over here. Because they all correlate very strongly there. Okay, the next thing to look at from an intermarket standpoint is obviously the dollar. The dollar, we saw a lot of strength the prior trading day, and then all of a sudden we started getting weakness here. And there is speculation that there's a yen intervention. Sell dollars, buy yen, whatever you can do to strengthen it. So as this goes down, like look at, see, this is going down. So watch yesterday's video how we talked about that. But these type of moves, right? Those type of moves. Now they didn't confirm whether or not this is intervention, but those type of moves are intervention. I can't say for certain, but for certain that was an intervention. No, I really don't know. You can speculate that it is, but it's pretty wild. It's pretty wild moves. I mean, how much pressure can they take when this thing was like, look at this thing from a weekly perspective. This thing was, now these interventions, right? The last one was in what, like 2022 or something like that, apparently, that they said. This big breakout right here, that was crazy. And, you know, you start to feel the pressure here as their currency is getting obliterated. So they're trying to do something to step in. Whether that's going to work or not for them, we don't know. It's getting into some more, you know, crazier stuff. But now, as that comes off, if this comes off and the dollar, right, if the dollar is going to weaken, we got to look at the correlations that the dollar has. Right? So a weaker dollar, look at the dollar coming off right here. The dollar's coming off hard. Look at this. So this right here would tell us that, hey, take a look at gold. Right? Gold could be a big player, right? Gold is nice new move up when kind of that was coming down, but it's also coming down right now. S&P 500, typically a negative correlation there. So as the dollar's coming off, this is kind of holding up rather well. The dollar comes off further, and I'll show you more specifically the correlation chart that I'm talking about so you can actually visualize it. It's important to visualize what it is that I'm talking about. Yeah, if the dollar's going to be coming off, we can come right back up here. Yeah, so oil doesn't have that strong of a correlation as it stands right now to the dollar. Bitcoin has not much of a correlation as it stands from a shorter time frame, 15-day time frame. CRB index doesn't really have much either. It's S&P 500 has a very clear, I mean, even that's moving now. All right, and there's the market going up here as the dollar's dropping off as we're talking about it. Okay, so here's the correlation chart while we're talking about it. This is the correlated chart between the dollar and the S&P 500. So when it's below this line, it means there's a negative correlation, which means what? It means that if it's negative, it means if the dollar go up, S&P 500 could go down on a 15-day trading basis, 30-day trading basis. Right here, there's a small negative correlation, but 30 days is a deeper negative correlation, okay? Dollar go down, S&P 500 can go up. That's what that's showing us. So as we're moving right here on a shorter time frame, coming back into this area, called out in real time here. That's kind of cool. What's the dollar doing? The dollar fell hard and fast here. Now it's kind of just catching a little bit of a bid. Okay. Yeah, it could be a fake pump with no volume, but let's take a look at market net flow. Is market net flow telling us anything? It gave us convergence here, and look at the cumulative net premiums. Look at the divergence here. This is sinking. This is growing. We have convergence. It's kind of waning, but we do have convergence here. So overall, yeah, we're getting chop, right? It's not giving us very clear insights, but it is telling us right now something. Okay, we'll go to 0 date. We'll just recheck these levels. 50-50 is, you know, a level of interest. 50-25 is still a big focus there for traders. That's the put wall still. And where are we right now? We're above 50-25. That held, and this was a level identified in the early trading session, among other ones. And then 50-50, still right up here. Okay. Yeah, sometimes, yeah, Dope Gains has a point here. Sometimes these low volumes, they can produce crazy rips. They definitely can. I personally like to see, when I like to see volume come in, it's when price is consolidated and volume's dried up and then breaks out, and then you see volume expand. I love seeing that, because then you can typically get follow through. There's a higher probability that you get follow through on those type of moves. Uh, 10-year bond is dumping. Somebody had mentioned the 10-year bond. Let's just pull up TLT. I can look up ZB or ZN and stuff like that. But yeah, TLT moving up. TLT has been a dog. It's chopping around sideways. Yeah, and this is positive to see. Like, look at ZN, starting to see this move up a little bit here. The market, you know, when bonds and stuff go up, there's been a decent correlation with the market like that. Let's hop over to Tesla. Tesla's catching a little bit of a bid, just nothing much, right? Not really recovering much of its sell side there. Microsoft, a lot of chop, a lot of sideways action. Apple, a lot of chop, a lot of sideways action, but right out of the gate you see higher lows building into a pivot area. Nvidia is holding this market together quite well, right? We're seeing a little bit of breakout of this little downtrend here. Google, a lot of chop. I mean, it's a lot of chop around the board here. Amazon, chop. I mean, earnings was like a nothing burger. Look at that, nothing burger. Meta, still chopping sideways over here after its bearish earnings gap. Okay, somebody said they wanted to see MasterCard. MasterCard reported earnings, what, today or yesterday? Yeah, we're seeing some follow through. So bearish earnings gap, you typically get follow through to the downside. So just be careful on these, obviously. When you get pullback, just like a bearish earnings gap or like a power earnings gap, you can get pullbacks, like that can be to the upside, and look for volume to contract, and you could potentially get follow through. Just like on a bullish earnings gap, I look for pullbacks and follow through. Okay, it's pretty, that kind of stuff happens. You got to really be patient. For example, like Lulu, this was a bearish earnings gap. Okay, I traded Lulu. If you're in the trade ideas or whatever, you can go back to when I posted this chart, and I'll show you, kind of when I become a little bit more, inclined to trade this type of stuff. But bearish earnings gap, people were like, oh, it's so down so much. It's down so much. Well, it went further. Well, what about right now? Is it going to bounce? Yeah, maybe. But if it breaks down, be careful here and respect that. Oh, it went down further. And then we started getting very tight. And this is right here where I talked about it. We saw a nice little follow through. You can update stops. I'm out of the position by now. I got out of it, I think, right around here. I don't think I traded into this day. I think it was maybe a little bit into that day. I can't remember. But now price is consolidating a little breakout, and you got to understand that a breakout, it's fading, right? Fading the down move up, right? It's going up into a bearish trend, and it's going to have to put in a higher low. And then it's going to has to put in a higher high at some point here too, if you want to be more bullish. If you're going to play it aggressively, then you got to be aware of that. All right, S&P 500 is moving up into this area now. We'll see here if we can overtake that level there. I'm glad that I stayed in my position. Some of the position, I should say. Okay, look at CVX. Yeah, we can look at CVX. Money main, no, I can't move market. No one, not a single trader that I know of in anywhere can move a market with posting a trade on their Discord, unless if it's a low float name. But we post, and that, you know, we post some names that could be low floats that if a lot of people enter it, maybe it can potentially have an effect. But when we're talking like S&P 500, yeah, right, dude. Or Tesla, yeah, right. And anybody that claims that they can move Tesla is a narcissist. Like straight up, it's absolutely insane. You can maybe move like a specific option because you got to make the market. But yeah, to move the higher liquidity names, like that's crazy. That's crazy. Yeah, but like move a market like S&P 500, yeah, no way. Not a chance in heck. Not a chance. Not a single chance. And I always talk about in the Discord. So if I post a trade idea or if I post something in the watch list, my updated stop or what my updated tight list, I always mention volume to pay attention to volumes because you don't want to get trapped in a trade. So a lot of my names are typically over 200,000 on daily volume, but sometimes other ones slip in there, the lower names. And even that is like too low a volume in most cases. And if you're trading options and it only has 200,000 volume, like you need to be more like clear on options. You got to pay attention to those bid-ask spreads so you don't have slippage. I remember somebody asked me to pull up a name during a day before, and literally, I swear to you, I kid you not, I saw at a point where it had like a $7 or $8 spread on it. I was like, whoa, dude, no. No. There was even one name that was like crazy ripping that was like over $100 spread during the day. It was like, obviously that's when liquidity dries up and you just see boom and they just blow out, the spreads blow out. I forget the name of it, but it had, somebody probably here knows it because the thing went up like thousands and thousands of % in a very short period of time. And everyone was like paying attention to it. What was it? Like, I can't remember. It imploded on itself, obviously. Completely imploded on itself. Not surprised. What do you need? I can pull some liquidity. Exactly, Daryl. Yeah, they're still, it's hard to overcome this area right here. All right, they stepped it down. Now, we'll see if they step it down on us again as they're trying to come up here to fill it. But this is, you know, we just don't have the strength right now. And this is happening to be right around the month to date. Anchor volume weighted average price. Anchored VWAP. Make sure if you're watching the streams to like, share, comment if you haven't commented. Let me know if you want me to pull up any individual names or so forth too. It helps get the stream out to some more people. Right? I do these streams obviously for free. So that's one way you can contribute. I've got a lot of Patreon members too that support this channel. They're the ones that are actually helping me to do this, to give out free content. I could technically, you know, paywall everything, or multiple videos, but that's not what we do. We wanted to do a low price so I can overtake my corporate career just to make up for some of that, which it didn't, but takes up for some of that so I can produce more content out here. UAL and Meta, let's do it. Yeah, let's take a look at UAL and some Meta. So we just pulled up Meta. We'll pull up Meta. We'll pull up Meta. Yeah, Meta's just consolidating here. I mean, if you're looking for a potential bounce, I mean, we could do it. Maybe to and around 450. But remember, you're trading at like a pretty gnarly bearish earnings gap, and volume's drying up. We're getting back above the 5-day moving average. We're trading around the point of control here. Yeah, I mean, to see it pop up for sure. I mean, it's always a possibility here because Meta got cracked on earnings. And you typically get follow through, right, to the downside on these bearish earnings gap. But there was quite a reversal here, and now it's just consolidating sideways. So if you are going to trade this, just be aware that you'll be trading against this big move. But if we're just looking at it in the short term, yeah, maybe we want it to hold this low over here at about 426.50. So you play it up, and maybe you can get a measured move of a flag. Remember, it's a bullish pattern, but it's in a bearish trend. So bullish pattern, check. Bearish trend, check. So you got to stack ideals in your favor. So if you go into the smaller time frames and you look at the 5-day moving average starting to turn around, that's actually a good sign. So if it gets back below it, then it's not a great sign, right? You can look at this and be like, it's kind of flagging here. I'd say, yeah, it is. The 5-day moving average, though, and price has been going sideways. So even here, this bear flag, right? Bearish, check. But is it like in a bearish context? Yeah, maybe from here, but from a very shorter time frame, it's actually neutral and going sideways. Patterns, they work way better when you have the trend with you, right? Hey, Metal Mike, thanks, man. Says, well worth it, been a member for over a year. If you've been a member for over a year, chances are you kind of been through, like some people have been in there longer too. Hasn't been around for too long, but yeah. It's changed a lot. Like, for example, we added the entire Trady Tick suite in there. So it's like, you got the query channel, so you can manually type in commands, and you can get 0-date levels on SPY, SP500, IWM. You can get market net flow. You can get algo flow. You can get all kinds of stuff. Like, people are constantly in there typing different stuff. You can get algo flow for specific names. All kinds of cool stuff you can pull up. Wall Street bet chatter. Like somebody just posted that one just today. Zubar, I don't know if he's watching the live stream, but I'm going to repost that just to see. So watch, I'm going to type in a command called Wall Street Bets Chatter, and it's going to pull up what's chatting on Wall Street Bet. Look at this. Actually, I don't think that's going to work. Yeah, somebody's typing in there right now. Watch. No, what's going on here? Did that do it? Yeah, so this is what pulls up. Wall Street Bets Chatter. So it looks like Tesla, AI, it's just random, right? It's updated every 30 minutes. That's a random one. Did I just... Yeah, see, somebody just pulled up a market net flow. But then there's also a scout bot. Like, it tells you, like, based off of the strat. So, for example, like, let's pull up a random one. Today at 8:22. Actually, you know what? Maybe give me a second before I pull this stuff up. Is Powell speaking again today? I don't know about that. Is he? I don't think so. Does anybody know if Powell's speaking today? That was yesterday, for sure. I feel like I would say it here if Powell was speaking. Thanks, Jake. I don't think Powell's speaking today. It usually would show that here in my calendar. Okay, there's a couple of people saying no. Hey, Paul, Nate, Coding, thanks for following there on TikTok. Appreciate that. If you guys can, make sure to hit those likes. It helps grow that live stream there too. Appreciate you guys being in here. If you guys want to see some names, Dean Wallace is joining here. Matt's new joined. A lot of people new joining in. If you guys want to see, obviously, some individual names and pull up, we can do that. S&P 500 is getting really caught up here at this month-to-date anchored VWAP, and you can see that clear as day here. It's also getting hold up. Now, price action is getting pretty tight here. Pretty tight. Okay, it did the same thing over here. We're not seeing it. No, well, we just saw a little bit step down, but not crazy. This happened over here to see this sell off. And now we're just kind of holding up. So let's see if we can do it. Market net flow still have positive convergence, but it is waning here quite a bit. I'm sure he's speaking to someone. Yeah, he's talking to somebody. Thanks, Craig. Give me a moment here. I gotta... Oh, my baby. She always sends me photos of my boy. My baby boy. My baby boy. Yeah, so there's a scout bot, which is kind of cool. It shows just like alerts. It shows an entry price target, but it's based off of the strat. Discord's not an alert service. I don't do any sort of alerts or anything like that. But Trady Ticks offers an alert service, and I have that in there. Bullseye bot, Trady Flow bot. You can read about these on their website, what they mean. Golden Sweet bot, so options flow and stuff like that throughout here. Dark Pool, right? All kinds of cool stuff, man. And you can use it. You don't need to use it. It don't matter. Then you have the community and all kinds of other stuff. It's cool. All right. Let's go back to Bookmap. They're still struggling over here. Come on, man. These guys are holding this up. They're holding us up. They don't want us. They don't want us to succeed. God does. But they're not stepping down here. So we are consolidating. So we'll continue to monitor this. Like I said, I wouldn't mind putting on a little bit more exposure. You're my boy, Blue. Okay, what were some of those names that people wanted me to pull up again? Sorry, I paused. So Meta was one of them. This is just how I work sometimes. UAL was the one. Okay. I mean, this is a good look. It's a good look. It's just consolidating. It's earnings move. So we had an earnings gap. It didn't consolidate it. It followed through. And as price is coming down, volume's drying up. It had a little bit of wickedness over here with some higher volume. So, that it puts a little bit pause to me. But if it can get up here and tighten up again, I mean, this opens the door for another pop higher. Now that we're breaking above this high, I mean, it still opens the door for this swing high. I prefer this to slow down a little bit. See how it's slowed down right here? And we crack the low, and then we follow through with the higher volume. I would prefer now to see this tighten up again. But you would think that after a bullish earnings gap like this, strong move, follow through, consolidating now, digesting its gains, maybe letting the moving averages catch up a bit here, then we can set up for another nice run. So maybe watch this trend here, right? Pop up through. And then you have an idea for stop loss, right here. Unless if this gets taken out first, right? 5-day moving average is below it. So get it back above it. This starts turning back up. You can look at it from a couple different ways. But yeah, overall, I think that this is a good sign. A good sign. As far as is it ready right now in this current moment? Like I said, I would prefer after breaking this little tight consolidation to the downside. Right here, I would have been ooh, yeah, right here. If it broke the high of that, I would have been game to play to the high or follow through to the upside. So it looks like it's just taking a little bit more time to get there. Hoover. BA is a buy because of that. Shoot, yeah, I know. That's some creepy news that we've been hearing out of Boeing and the whistleblowers and stuff. It's just eerie. That's the right word. Yeah, Boeing's just been news after news after news, just getting crushed left and right. There'll be a big bounce in here at some point. It's just a little too hard for me to anticipate it. I definitely wouldn't want to chase that move. Maybe if it pulls in a little bit. It's getting a little frothy here on the 15-minute time frame too. CVS reminds me of oh my gosh. What happened? Down 17%. Yeah, so big bearish earnings gap. And you typically, once again, yeah, you can have bounces, but I mean, like this type of stuff, dude, I just step away from. I wouldn't short this. So chances are you're probably thinking, hey, you're probably looking to go long. And like, I don't even want to enter into that for a long position or a fade back to the upside a little bit, just because like I would be on pins and needles. So if you are doing this kind of stuff and you're trying to play a oversold bounce, you can make money doing that. Just pay very close attention to your position sizing, right? Because if you oversize your position or you average down and it keeps dropping, you're gonna have a Lulu problem. A Lulu problem is this right here. It gaps down, you're like, oh, should I do it? Should I do it? And it keeps going and going and going and going to the point where probably everyone gets out and then you see a bounce, right? So price action still being just not enough demand to overtake this wall here, but they didn't really step it down this time. Not a great look there. Kind of stepping in right over here. Not a great look. Still getting hung up over here. Okay. So if we go back into market net flow, what happened? We started losing convergence over here. Markets follow through to the downside. Choppy, back under the daily VWAP. choppy, back under the daily VWAP. Starbucks and Baba. Starbucks also just, a lot of these companies are noting how weak a consumer is. And this was like a 2 or 3 standard deviation move, practically. Definitely a 2 standard deviation move, almost probably a 3 standard deviation move on earnings, right? The earnings was here and it gapped way down. So the same situation goes here. Like I don't step into this type of stuff. Yeah, you can probably see a bounce, but I'm not ready for that yet. I'd rather wait it out and see if price action get even tighter. Even if it comes like this and gets tight, then maybe it's like Meta did that, right? Then maybe something, right? But it's too early for me. Yeah, you're way extended from these 5-day averages. You know, maybe perhaps after more time, I'd be more inclined to look for something. But it's just, I just don't get my money tied up in this stuff. And if I do, once again, you got to be more aggressive. I would have to be more aggressive. So for example, on Lulu's strong move down and I played it up, I had to be much more aggressive on profit taking, and I'm not going to hold it for a long term because it's in a downtrend. I prefer holding things more confidently in a strong trend because I don't short too much. Hey, Mean Boy Coins, thanks for subscribing to the channel. Apple broke out like I charted. Let me see. What did Apple do? Oh yeah, Apple's kind of moving here. Apple's coming into earnings, so who knows what can happen here in Apple. Like Apple's been beat up all year, so I wonder if it's gonna have a Tesla move. You know, like how Tesla's been beaten down all year. I wonder if Apple's gonna have a similar kind of like, power move up, like, right? Well, because once everyone's bearish, even if it's bad earnings, sometimes people are like, yeah, just they go for it. Let's take a look at IWM. How is IWM doing, holding up here? Man, dude, IWM, everyone was pumped, man. Over here was so nasty. I was trading it over here. And I was like, yeah, maybe I'll trade it if it tightens up again. And I looked at this wedge to play it. And then it just like gapped down and just been crud ever since. Right now we have an inside trading day. It's holding up. Other people will look at this and potentially say it's a bear flag. But it's a bear flag where it's in shorter term bearish, right? The 20 is pointing down. 50 days rather neutral, and the 200 we're above that, just slightly inclining. So not really a trend. It's chop, right? So a bear flag, but it's also in a range. So in these type of situations, like I don't put too much weight on like, oh, it has to break down to the measured move. Right now, I just see a consolidation because you can see it simply just break right back up. Vice versa, you can see it break right back down. Okay? Got to stack ideals in your favor. The more ideals you stack in your favor, right? Say if you stack like 3 ideals in your favor, and that's like, I don't know, price trend and the contraction, like price trend volatility or whatever like that. And you're like, hey, volatility's small, it's giving us a good risk entry. The pattern's bullish, and then we're in a positive trend. If you do that, if you just focus like check, right? chances are you're going to probably have more success. As long as then you have to go into position sizing, right? You don't want to go oversized position, you lose on a trade, and then you lose all your money, right? You want to do consistent position sizing too. If you don't do consistent position sizing, your P&L is going to look like this. Ah! Oh, I'm back. Ah! Wee! Oh! Right? Melly. Yeah, Melly is Melly's holding up here. It's a little too wild for me right here. But we are getting a little bit of contraction over here. Just a little kind of a cleared uptrend, right? We undercut the 200-day before. We're undercutting it again, and we're coming back through it, right? Making a U-turn back through. Back above the 20 days, it's starting to turn around, and you're going to come into around the 50-day declining, right? So it's clearly a downtrend here, starting to break through it. So, you know, maybe if it tightens up in here, maybe it opens up a little bit more of a door, but it's been an aggressive move from this low to this high, and I would prefer to see it consolidate it. Yeah, I'll check. Yeah, sweet. I'll check into that. So really quickly on Bookmap. Yeah, these guys have been the players. This is what's holding up the market here. Okay, still coming off here. I still have a position on too. Let me check out. I want to make sure that's okay. I'm fine. It's fine. I don't mind holding it even if it comes down because I took 70+% off over here. So I'm good with it. I'll let it run. I'll let it run to see what happens. Doesn't look positive here by any means. The higher probability outcome, by the way, is always coming down and trading to and around the expected move again. It's always been that way. Like, so you see, we came down to it, we tagged around, we played around it. Even when we saw this move up, it came right back. We literally closed on the dang like that is wild. Now, if you don't know what the expected move is, the expected move, this level right here, we determined that level. We got that level, this level specifically last week, right? This is why it's so important to pay attention to risk. It's crazy, right? The market came down to its happy place. And it's been literally, it came down there today and we traded outside of it. Now, what is this? What is this? Like, we have a high, a lower high right here. So the market is a little frothy, a little skeptical right here, but we have a higher low, a higher low as it stands. So what's price doing? It's consolidating, it's contracting. I mean, and then you have your lower expected move here. So if we can't overtake this stuff and we're under the daily VWAP, I mean, let's not be shocked if we come right back down to the expected move again, right? Right now, it's just chop. You don't got an edge here. We'd have to look at individual names potentially to see from that. Yeah, let's pull up CVX. Somebody had mentioned CVX. CVX. So I think oil names have we're in bounce territory for a lot of oil names, right? As they've been getting hit pretty hard. But just understand that you'd be entering into a period of higher volatility, right? Strong move up, strong move down, no consolidation. Now, if I go into the smaller time frames, like even the minute today, right? What do you see, right? Price action contracting, getting tighter here, okay? I feel like there's better entries. If you look at the 15-minute time frame, we're below a 5-day moving average, but price action is getting pretty tight here, and we're holding above the volume shelf right there. So, yeah, I think energy names we can see a bounce. I have some energy on right now, by the way, and it technically will move with Chevron because it's an ETF that I'm trading. Okay, actually, let me check in on that position. Let me pull it up. This is on this is not in the shorter term account though. This is like in a swing account. You guys got to see my P&L curve for during this market turbulence on my Roth IRA. Freaking wild. Like my other account that's a little bit longer term is dealing with this volatility as it is, but on my Roth, I like much more sniper effect, right? I'm a little bit more of a sniper there. I got to show you this. This is crazy. I got to show you this. It's pretty crazy. Come on. Where are you at here, buddy? I'll go 1 year. It doesn't look that dramatic because it's so... Okay, there we go. All right, I'm not going to show balances. Look at this. Mind you, this is during the times of all the volatility in the market. Now, my other account, this is one of the basically 3 accounts in my 401 or in my Fidelity. I also have my interactive brokers. I have day trading stuff. I like all this kind of stuff, but this one is a little bit more of a kind of a sniper account sort of thing. Pretty wild. Pretty wild. And I'm telling you this because I've been saying this very frequently. The market, how it's been moving. Let me pull it up. The market, how it's been moving. Like, what did we say? This whole move right here? Like, if you manage to be up in a position, like, and you're making hell of money, I understand the market, dude. It moved in one direction with no pullbacks. So literally, if you confused good fortune and luck right here, right, with skill, ooh, that's a grave mistake, right? Because now we're seeing volatility. This right here, right there, that right there is what real skill, that's where the skill comes in, is how you manage your risk. Not making money when the whole market's going up, but when the market's going down, focusing in on that down capture. And by the way, I'm not shorting. I didn't short. Maybe a few very short-term, smaller position shorts, but I didn't like catch this move down. All right? That's not what happened. Okay? Now that volatility is entering the chat, right? What did I do? I backed off a little bit, and I've been very strict and kind of just very strict on all my positions there. If I go to all my accounts, you'll see it's different if I look at all my accounts, though. So here's my P&L curve for all the accounts, which it's right now actually at it's going to show a little lower. I don't know why it's just not showing my balance though, or my P&L. So this is all the accounts combined. Now it's actually sitting up higher. It pulled off a little bit, but do you notice this volatility here? How it's been chopping around? It's holding up well, given the context of my Roth, but my SEP, that's dealing with the volatility a little bit more poorly. So, yep. I don't know why I shared that. I share it on occasion, but yeah, it's just being tactical, just being patient, being tactical, being patient, and not getting too overly dramatic on any one position, right? It's just inventory. Don't get married to one position or anything like that, and just play it as it plays. What was I doing prior to that? I was doing my energy position. Jeez, I get so sidetracked. Okay, so my position is actually in the Roth. I'm trading ERX, which is leveraged energy. It is a small position because I do not want to get cash tied up, so I shrink the position, but it allows for 2x so I can have less capital because it is a cash account that I'm trading right now. Sometimes it could go on margin, but I don't trade the margin. But it is right. This one specifically is cash account. So ERX, yeah, and I'm up like 1% on there. I just have a little spot on, a little S&P 500. And then I'm trading LPG, which was a trade idea. LPG looks really clean, actually. I'll go to the daily time frame and I'll show you LPG. Why am I doing it over here? Yeah, I'll show you LPG. LPG kind of broke this downtrend line right over here, and I think this is right about where I entered. So I'm pretty much flat on the position. Yeah, I would consider myself flat on. I mean, I'm up 8.88%, which is technically flat here because of just the volatility in this thing. So it's a small, obviously it's a smaller position. It's like 2 or 3%, not even. But we broke this trend line. It's, you know, retesting some supply up here. We broke it with some decent volume. Now it's consolidating. Very clear area for risk would be, you know, right in this area right here, right? This would be the risk if it gets below it, like you're out. But then the upwards potential would be, you know, up to the swing high. You know, maybe even higher if it wants to continue the trend up. I don't really overthink it too much. That's awesome, Todd. Good stuff. How long did it take to be a successful trader? I don't know, a while. Shoot, like when I really think about it, I've been trading for 10 or 15 years, right? I'm 36 right now. And I've been definitely in my 20s. I was trading. Even prior to that, I was learning about it. But it took me a while. It was just, I approached it differently during other times. But in my early stages, it was more focused on investing. I was just piling in money into my 401ks. I started literally probably investing the most coming out of the Great Recession. Like that's when I started actually making good money as a younger adult, you know, with my career. And I stayed with that career for 13 plus years. And I just recently left a few years ago to do this full time. And even when I trade, like a lot of people say like, oh, I want to trade full time. I want a full-time trader. Dude, I don't use my day trading income as a full-time income. Like I don't. Like it's very hard to do so if you don't have the capital. And to say if you're only trading a $100,000 account, I mean, do you think you're going to double that every year to make just 6 figures, right? You typically have to have income from other places. So I don't rely on this income. I always look at my trading income as like an addition. Like, hey, oh, dude, I made, you know, a couple $100 here, $1,000 here, or whatever, right? Or I lost $1,000 or whatever. It's like, okay. But, you know, if I make a few thousand extra or something like that, it could cover groceries, it can cover a little vacation, it could buy some extra stuff. That's how I look at it. And then my investing accounts or swing trading accounts, I mean, they're just, the money just grows in there and I don't even really touch it. It just kind of it's there. Maybe one day I'll take it. Baba, yeah, Baba was one that people wanted to pull up. Ah, man. You know what sucks is I was looking at this last night. Looking at this little consolidation in this area here, and it broke. I wish I would have pulled this up earlier. A lot of Chinese names are looking pretty darn good, people. So we broke out of this. Now we're coming into the, now I wouldn't necessarily want to chase into this, but this is a good thing to see if you are bullish, obviously, China stocks. Seeing this break up. Now I'm actually interested because I do have DIY. Yeah, I bought in right here. I actually traded throughout here a lot of times, a lot of break evens, but I'm up like 25% on this position. I still have some on too. I'll show you. Yeah, there it is. S&P 500 is coming off a little bit here. I should probably get out of my position, actually. Yeah, there it is, DIY. All right, market net flow. Did news come out on Baba? I don't know if any news came out on Baba. I know earnings is around the corner. It's at the start of Labor Day Golden Week. Wednesday, Fed decision, strong deliveries, EV. Lifting Chinese stocks on Thursday. Alibaba options alert. Smart money. Some smart money's coming in on big bets on options. I don't know. But yeah, very strong move there. yeah, I wouldn't say chase this stuff. I don't like chasing this, but now after seeing a strong move, you could potentially see consolidations and stuff. Even if it continues up higher, you'll get some sort of consolidation at some point. Remember, the trend is still technically down, right? It's below a declining 200, but good stuff happening there. So that means, K-Web, right? K-Web's following, obviously. So nice moves there. FXI, nice moves there. Huge moves. This was actually a trade that we took over here. Boom, into and around this area. I didn't catch this move. Basically, just given the context of the overall market. I didn't have much exposure into the market at this time. But nice moves over there in some of these Chinese names. JD jumped almost 10%. Yeah, some great moves. All right, so S&P 500 came in a little bit here. We're still obviously struggling in this area. It didn't step down. It still remained here, but there's been nothing underneath us. All right. So if we look at market net flow, we're starting to actually diverge a little bit more, and we're starting to gain here. So that's good, but overall, once again, it's a lot of chop. It's a lot of chop. So coming back into and around the daily expected move, cool, makes sense. But also, higher probabilities are always that we just kind of just float around the lower weekly expected move, and I'd say we're doing that right now. So we have a high, lower high, lower high. This would be a lower high here too as well. We have a low, a higher low, and we're kind of floating around here. This could have been technically a little crack of that, but yeah. So it's getting into kind of that realm of breaking here somewhere. This looks like it's honestly trying to hold up right here. You see these lower highs. I mean, if this gives way, it gets way, we could easily see a flush back down into these areas. I'm not going to trade it to the downside. But I also wouldn't I'm not looking to expand on my long position either, right? Is Bitcoin moving right now? Up 3.8%. Yeah, I mean, it's just an inside trading day if I look at Bitcoin futures. It was actually seeing a nice little kind of consolidation with a bullish little thing here, but then it cracked lower. Now we're kind of bouncing back. All right, let's take a look at some of these chats. What Rocket League game is this? Mind giving AUR a look. Yeah, protecting the F500. You're still holding Ethereum. What do I think? I'll pull that. I can pull up my cellular to shift tool, actually. It gives good insight to that kind of stuff. What is AUR? Aurora Innovation. Is this a cannabis name? It's funny now I look at charts and I could literally I can look at a chart and be like, is that a cannabis name? Or is this like a biotech, a pharmaceutical name? It's so funny to me. After a while you see charts and you start seeing it. Yeah, AUR is not looking bad. I mean, it's holding up here, it's consolidating. But I look to the left of the screen, it's been a lot of chop. I don't know if this is a cannabis name. It sure as heck looks like one, but I don't know. Or a pharmaceutical name. It's a little too loose and sloppy for me to trade this type of thing. You can see here, if you go into the minute time frame, how it can go sideways. I don't like this, and then it squeezes up. It's not my style of trade being, under these, these lower price names. I need big companies if they're lower price names. So I traded for example, DIY. That's a lower price name, right? But we're talking, it's a huge company in China, right? And then I could play the technicals a little bit better. what is insider trading? Oh, inside trading days. Okay, an inside trading day. We're still getting some sell side here, guys. I can't say that I'm shocked right there. I'll explain an inside trading day. Give me a second here. Okay, so that's a lower, that is that lower low following through to the downside there. So not the greatest look, okay? Not the greatest look there. So we'll see if we can get some support here at some point. Okay, an inside trading day is when you look at, like, for example, like I'm saying day because it's a daily candle that I'm talking about. It's noting a period of contraction, right? Price actions contracting or consolidating. So for example, if I go right here on the S&P 500, do you see how this range of the candle had a high up here and a low down here? Right? This big body of the candle. And then the next day, see how this next candle traded inside of it? So it tells us that volatility came in, huge volatility, and then we traded inside. We actually traded inside of it again, and we traded inside of it again. So all that is just telling us right here, these candles are inside, like trading inside that big day. So it's contracting. And price, if you understand the principles of technical analysis, right? Prices move between expansion and contraction. All patterns to some extent do this. And that's what we're seeing happen here. So when we break beneath it, you can get follow through. So when I show you that, when we broke through it, look what happened, right? We tickled around there and then we broke through and we saw follow through to the downside. Boom. It doesn't always play out so clean and perfectly, but that, we contracted and then we expanded. Nvidia is an inside trading day. You said you're stuck up at around 900, 905, up in this area here. If you were stuck at 905, that means you managed to go through this period, right? Does that make sense or no? And now you're looking to escape out of the position. The easiest way to escape a position is to just get out of the position, right? And not try to hope that it goes to break even. Like, you can get lucky and it could go there, but you can get unlucky and it could keep going. So remember, you got to focus on what you can control. That's what you buy, when you buy it, how much you buy it, and when you sell it. So if you're focusing in on these 4 things, you're going to have to think ahead of time about your second trade, right? Your first trade's important, but your second trade is your most important because that's when you get out or when you pull profits or whatever the case is, stop loss, whatever the case may be. So as far as like the short-term stuff goes, it is contracting, it's consolidating here, right? Higher lows, lower highs, price is getting ready to break. It's below a 5-day moving average, but it is inclining. And we have Apple earnings after the bell, and who knows if if Apple can affect these other stocks in a positive or negative way when it reports. So as far as insight goes, we're in kind of a crossroad. We're in a crossroad here. So there's not great insight whether it's going to be moving higher or lower, because since this day here, this was the day that gave us the insight. And since that point, we've been getting strong moves to the downside. You get reflexive bounces and so forth. Overall, price action is just going sideways. And then we have an inside trading day today. So it's like if we break the low of today, right, that could expand to the downside. But if we break the high of today, that could expand right back up to the upside, right back to that 905. So, this little risk here is within this last trading day candle. That's just about as clear as we can get it at that point. Like, look what happened here. So this was a big range day, and we had an inside day, inside day, inside day, inside day, and then we broke out of it. And then we moved higher. And then even this day, we had an inside trading day to this candle, and it bull trapped us. Right? Broke out, boom, came back in, and it got below this. So this would have been a stop out point right here. I think we actually talked about that on a stream or something. I can't remember. And then it followed through to the downside. Now we're doing it again. If you need a hold to earnings or not. All you'd be doing there if you hold it to earnings is you're just holding on to potential risk. right? I mean, that's what a position is. Like you have risk in and you're determining whether you could get risk out. The thing is, like, if you want to have it hold into earnings and you think it's going to go higher, but you're like really like questioning the position, my guess is that the position's too big. And if the position's a little too big, then the next time you approach it, right? The next time you approach it, make sure that you're really focused in on those 4 things that you can control, right? And the big thing there is position sizing, right? I like in Nvidia, like if I take a full size position in Nvidia, like it's not going to be pretty for me because a full size position to me could be 6 to 10%. If I take a 6 to 10% position in Nvidia, which has a huge implied volatility and it moves like crazy, that can have much more an effect than 40% of my portfolio if it's just sitting in gold, right? I'm just saying like a lower beta name or whatever. So yeah, if I look at Nvidia, I'm like, maybe I'll put in 3% of my portfolio, 4% of my portfolio into it when there's very minimal risk, like meaning that we're contracting, right? And if we break through the low, then I'm out. So that's all. That's my like. That's kind of like how I approach it, how I think about it. But yeah, I don't know. Hope that helps. Hey, thanks, Randy. I appreciate that. Yeah, better safe than sorry, Emmanuel. Yeah, for sure. All right, so we're just chopping here. The S&P 500, we caught a couple little bits here, but you can see that they're adding some supply overhead. Maybe we overtake that. It's not much. The big level is still going to be over here. You're chopping into you're chopping into earnings. You're chopping into Apple. Are you sensing a breakout in the Qs? Are you crazy? I don't think you're crazy. I mean, I would leave that open on the table any day right now. I mean, because we don't really have an edge. So, I mean, you could have just said, I think the Qs are going to crash. I'd be like, you're still not crazy. You know? It can literally, you can look at it either way right now. That's what's crazy right now. So if I go to Qs, I don't know what time frame you're talking about. Maybe that'll help clarify some stuff. But, I mean, if I look at the daily or the minute time frame and I'm just looking at the structure for the day of the market, I mean, this thing ain't going anywhere today. I hate seeing the lower highs, but I do, you know, the higher lows. We are seeing higher lows. Now it's just kind of going sideways here. So, I mean, yeah, it does look like it can roll over. I would like to see it come up, boom, pop through, but I don't know. You can literally say it's going to go down and it's going to go up. There's zero edge right here, people. There's zero edge. You take a stab in the dark. But I will tell you this: it's luck. If you're right, you're lucky, right? If you're like that, I'm saying that you're lucky because you can be right either way right now. I don't know what to tell you. Do. Oh, who lives in a pineapple under the sea? SpongeBob. So who thinks we're going underwater? Who thinks we're going to rocket ship and fill this liquidity overhead? No man's land right now. Ain't that the truth? Ain't that the truth? I do like seeing this, people. I like seeing this divergence spread out further right here. So now if the SPY can move up a little bit more and this turns green, that is looking like rocket ship material. It gives us something, right? It's diverging further, but we don't have any convergence. So, I mean, that's at least a decent sign. We got to get over 503. So we really got to get over this hump. If we get over this hump, that opens the door back to the daily expected move, kind of where we started the day. Yeah, we're just flowing the daily VWAP. I'm looking up some other names here. Give me a moment while this is playing out. Yeah, they keep on adding over here. We got to clear this stuff. They keep stepping us down. Little punks. And remember, the last 2 days, we've had aggressive closes. All right? Aggressive. Dang, Root, ROOT, man. We gapped way up on earnings, and that thing is just getting clobbered after it opened on earnings and then following through another 21% down on the trading day today. Grossi. El Grossi. Stepping down, what I mean by that, DD, is you can see the liquidity overhead, their walking price. You can see that they're moving their orders down, and then you can see that they added more here, although price looks like it's going to kind of absorb this liquidity here. So this is what I mean by the kind of walking price down. So this is the clear overhead resistance for the day right now as it stands. What if MicroStrategy breaks its trend to the upside? That's pretty crazy. So somebody asked me about Ethereum. If you're still here, I'll show you my Sailor to Shift tool. I'm just looking up a few names that are contracting right now before we do that. So RMD, this was a strong gap up on earnings. All right, boom. And now we're consolidating, getting tight here. So this to me, I like. Why do I like it? Well, because if you enter back in on a breakout, you can have, a clear stop loss, and you could play, a potential follow through to the upside. Hey, Rooster, thanks for the $9.99 super chat. Asking about explaining how to determine gamma levels in the flip line, or make a video of expected moves that I made. Proud supporter of the Patreon. I appreciate that, man. So when it comes to like gamma levels, yeah, I can pull up SMH2 here. How I determine them. So, okay. Look, I don't have the software or the means to code and use an API to mathematically produce these levels. So there's various services that you can get that they source their data in all various ways, right? Right. So for example, gamma lines could be different on Tradie Ticks as they are on Gamma Labs or Tier 1 Alpha, right? Or, various other names that produce and source the data. So I use Tradie Ticks and I use Gamma Labs and I source the data from them. So I source all that data from them specifically. And they get their data from their APIs, and their APIs feed in the data, then they run it through their calculations. They produce this stuff by looking through the option chain, all automatically produced, right? They do all of that. Gamma Labs has been great. I've really liked using Gamma Labs. It's a great price, great resource. They allow you to export some of the levels, and they give you some additional stuff. Tier 1 Alpha, also, I hear great things. I haven't had that service, but Tier 1 Alpha, I don't know if anyone here has it, but maybe they can comment if they like it or not. But they provide you with the Gamma flip line. And then Tradie Ticks is in our Discord. So you can literally go into the query channel and type in, I forget the code exactly, but you can get their Gamma flip line. And then I provide it also. It's not part of the service in Patreon, but I do provide it on a daily basis as of right now. In the day trading pit, where when I update it, and then also on my market briefs, and that is being sourced from Gamma Lab. I wouldn't mind. I know that somebody reached out to me with an email. They say they didn't know how to code and they could produce something for me. There's also, I think, there's another service out there that was crazy cool. I forget the name of it. It was like GexBot, I think, GEXBot. But Gamma Labs is like $14, like crazy. Like it's like nothing, and they give all that stuff, right? Tradie ticks, what's cool about Tradie ticks is they take out some of the data that they deem unnecessary. It's more expensive of a service, but they, they do some pretty cool stuff there too. Oh, Spot Gamma. Thanks, Will. Yeah, Spot Gamma is another one. Yep. I hear good things about Spot Gamma all the time. I haven't personally used their service, but yeah, Spot Gamma. There's so many out there. I should make one. I would only just produce the stuff. Like, dude, there used to be one website that they made for free that did provide it, and it was a really great site. But the unfortunate thing is, it gets popular, and then the server costs become more expensive, and they're like, dude, I can't do this because too much traffic comes in. They have to up their costs, and then they have all like whatever they're paying for to get the information and resync it. Apparently, it could get pretty expensive, and then they started charging like $50-$60 a month. I'm like, dang, it was free, it was great. And then I was like, I don't know if I need it for $50 or $60 a month. That was a while ago. Now, if they provide more than what they did, then I find it be worth it. But just a Gamma flip line for $50 or $60 a month, nah, no. I'd rather just figure out how to get it myself. Heck, you could probably go to Twitter advanced search and type in Gamma flip line, and then look at the most recent ones. And you might actually see people post it on a daily basis, Okay, so yeah, this one right here, RMD. I mean, I like how it's setting up because you have a small risk to potentially good reward. Volumes drying up, price actions consolidating. I mean, should I take a trade? I mean, it's not the greatest entry at this current moment, but I can do a speculative entry. It's an inside trading day right here, and it's trading within this. So the more ideal entry would be breaking the high of this candle right here. I'll just wait. I'll give it some more time. So there's RMD. I mean, this chart looks good, and I know a lot of people are going to know the name, but I mean, it's crazy, right? Hood. H-O-O-D. Excuse me. So Hood has an inside trading day here too as well. I can probably draw this a little bit differently, actually. I can probably draw it more like this to give you a clearer picture, Thanks again, though, for that super chat, the Rooster. That really helps support this stream a lot. I appreciate that. That's literally, by the way, a month over a Patreon that you just provided. Thanks, man. Okay, Hood, strong move up, right? So we get the strong move in Hood. Now price action's going sideways, consolidating, and volume's drying up. Now, the unfortunate thing is that earnings are around the corner. May 8th. We have an inside trading day. So I can't enter into a new position going into earnings. I just can't do it. I'm not that good. I'm not that good, right? It would have to be a really small position. So if we break out on earnings and we go like, oh, dude, you should have entered. If it looks like this and it's crazy, I don't care because, okay, I missed that move, but perhaps we consolidate whatever we do, and I get a new entry with better risk, right? And then I could play it again for a nice move. Oh, you bought the annual subscription too? Thanks. Appreciate that. Yeah, that helps you do the annual. Save a few bucks. And you're there for the entire year. It's like $90 or so if you're US dollars. Now it's more expensive if you live in Japan, but I don't know. My goal with the whole the Discord was to compete, because a lot of services, they might just say it's $30, $40, $100, $200. And I was like, dude, I'm gonna go in there for $9. I'm just gonna do as much as I can on there. And a lot of the data that I provide, I show you how to get the data yourself. I just do it. And then the trading tick stuff was a big addition because that costs quite a bit of money to get on there. But yeah, hopefully, hopefully benefits is what it is. once again, it's not a Discord service, or it's not a not an alert service. That's not what I do. It's not what I do. I tried it for a little while, and I just got inundated, hundreds of emails like, hey, what about this position? What about? And then unfortunately too, I may actually bring in my interactive broker swing trading account and trade like a smaller or a decent size account swing trading. But the problem with alert services is I can trade 10 names, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and I can get 4 of those trades correct. Okay? And I could get 6 of them incorrect. And you may have seen me get 4 correct, and you're like, dude, I'm gonna press this harder. I'm gonna start going bigger positions over here. And then all of a sudden you take 2 of these losing trades and it wipes out all your gains. Whereas I stay consistent, and maybe those 4 trades out of 10 still made me profitable. Don Bond, thank you for the $20 super chat. Holy moly, man, you did not need to do that. Thank you guys. Rooster's coming in, Don's coming in. That's insane. Thanks, Don. If you're not in the Discord, Don, you could have used that to get into the Discord, man. Thank you. All right, let's take a look here at the S&P 500. We're still getting hung up in these areas. Man, Don, that's crazy, dude. You don't need to do all that, man. That's wild. $20 super chat. Holy moly. Freaking Rooster, Don, man. Too kind. Ollie's asking about any tips on how to read Bookmap. So, yeah, man, it's very simple, right? Meaning you're just looking at the order book, right? The order book. This is the candlestick chart. You can't see anything other than what's happened. But if you look behind the candlestick chart, you get to see orders on a screen. Oh, sorry. Somebody asked me about SMH too, by the way. Here it is, the book map for SMH. Right, there's some orders down here at like 205. I like and then a big orders over here down at 200. It's kind of all over the place. I like really looking at really liquid products in Bookmap, like ES. Okay. That was your first super chat, by the way, on a live stream too, man. That's crazy, Don. Oh, you're already in the Discord? Oh, sweet. Bond. There we go. Okay, so Bookmap, the way that I read it is, it's literally just telling us it's just showing us visually the auction. All right, so you can look at like level 2 data. So for example, like, go to S&P, I'll go to ES. No, I'll go to SPY. Let's just go to SPY. All right, so SPY, I go to level 2. You see this right here? This is the market book, right? This is level 2, market depth, order book, whatever the case is. I am not good at reading this tape. Like, I can look at this, I see some big orders, but I'm like, dude, I can't, my brain doesn't wrap around it that quickly. Okay? It does not wrap around it that quickly. This turns it into a heat map. So I can see where there's big orders hanging out. All right, so the bigger orders are darker red. So more supply, all right? These are, supply and demand, right? Supply is above price, demand is below price. And it's an auction, and prices move to where there's supply or where there's demand. If there's not a lot of supply, but there's more demand, your price goes up into where there is supply. If price comes down, right? If price is coming down, right? That means there's more supply, and it's looking for where the demand is. And one of the big areas of demand that we've been talking about was down here, over here at 49.62. Like, the longer it stays here, like, I wouldn't be shocked to see price get there eventually. 2,500, wait, how many contracts? 2,500 contracts is not a small amount on ES. The notional value on that is absolutely flippin' incredible. So that's that's big dollars, big money that's making that assumption that price is going to get down there. Now, they can pull it at any moment. They can be wrong. Markets can be wrong. But from what I've noticed is the longer things stay there, the more likely they are to eventually get their fill. When and how, I don't even know, because I've seen things last for months and they eventually came and filled it. And we're like, holy heck, it filled. They were right. We were laughing about it when we first saw it. And then all of a sudden I'm like, whoa. Go figure. There's smarter people in the markets that have more money. Go figure. Yeah, we'll look at Apple for sure. We'll look at Apple, obviously. Yeah, so Apple is going to be reporting after the bell. We have a few hours before that moment. Apple, as it stands right now, we're kind of just hanging on to this 5-day moving average, and it's inclining on this downtrend. I mean, it looks pretty good. It's just, unfortunately, earnings throws things. It can be perfect. It could be horrible. But what we do know is we can get the expected move. So as it stands in this current moment, we're looking at about a $6.86 move, and there is a high probability that we tag or exceed one of those levels. So from where we currently are, right, that can be a move way up to here, about 180. That's just a 1 standard deviation. Or it could be a move, boom, right back down here into these swing lows. So if I draw this out, now remember, Apple, you got to pull these closer to the close, but we'll do it right now just to give you an idea. All right, so if I go to the daily time frame, I mean, chances are we're going to tag one of these when we report. That would be the higher probability. Exceeding it or not, I don't know. Josh, what you are explaining right there is called spoofing. And yes, it happens. Josh said, hey, if Bookmap shows unfilled orders and they act as magnets, can someone just with enough capital just put in an absurd amount of orders out of the money and then just cancel them the last minute? Yes. And it has happened. There's actually a story on that. Somebody had mentioned the name of it too. Someone who spoofed the market, and the market just tanked on the spoof, and then they pulled it, and then it was overhead. I think overhead supply. They added just a crazy amount of orders, and the price just tanked, and then they bought in lower, and then they pulled their overhead supply, and then it ripped right back up, and made just an insane amount of money. Yes, that's illegal. You're not supposed to be spoofing, whether you're caught or not. If you're a hedge fund or not, it's very hard to determine that. Yeah, it's spoofing. Yeah, so Nazir, thoughts on Apple is I'm just seeing your comment right there right now. Sorry, I was paying attention to the other chat there. That we just went over kind of Apple, so hopefully that answered your question there. All right, we're trying to make a move back for it, people. Can we do it? We've been testing it. The more times we test it, the more... Oh my gosh, get out of here, dude. Are you serious? Did you see that? Here we go. Come on. Oh my goodness. These little punks, dude. You see that, crud? They're like, oh, they're coming for it again. Should we knock them back down and piss them off? Yeah, let's do it. Here, let's throw in 600 contracts and push them down. Coins earnings expected move. JFAR, I can pull that up for us. That's funny. That's messed up, dude. Come on. This is annoying now. Come on, come on, bulls. Rocket us. Here we go. Step up. Should we go into the rocket ship and just kill them? Kill it. Come on. I'll jinx it with the rocket ship. Here we go. Come on, people. Any chance of SPY dumping? There's always that chance. There's always the possibility. But market net flow, there's no edge here. It's not giving us an edge of a dump or a rip, to be honest. So I can't really read too much into that. Are we going? Are we going for it? Excuse me. It's still hard to pull through these stuff, but oh my gosh, this altitude up in space. I can hardly breathe in this altitude. All right, I'm gonna pull up coins expected move, earnings expected move. When is coin reporting, by the way? Is that after the bell? Coin, okay, I think it's after the bell. Coin's expected move is oh my gosh, 258% vol, $25.67 move. Excuse me, oh my goodness. It's about right there. So it's about like that big as it stands right now where the market currently is at. Okay. That'd be the one standard deviation earnings expected move. Here we go, people. Come on. Come on to Mars. How's the air up here? Oh man, I'm just floating around. Just floating up here, just waiting for us to fill. They're adding a little bit more overhead, up a little bit higher. The unfortunate thing looking at this is we're not getting like, okay, it may get convergence here. Okay, so that'd be more of a positive sign. Let's see if anything's happening from a 0-day perspective. All right, 50-50, and then we got 50-75. All right, 50-50 would be the next area. 50-75 would be wild. That was actually there earlier in the morning. That'd be great. If we go to 50-75, I feel like that's going to be Apple that takes us there after the bell. We only have a couple hours left or a few hours left, right? You never know. You never know. Whoa, what was that noise? Hoover with a tier 1 sub over there on the Twitchies. Let's take a look at Twitch. How's everyone doing over there on Twitch? Trader Jens, did you see Carvana's earning move? Yes, I did see it. That is bonkers. We got a car vending machine that's just going absolutely bonkers. Pretty wild, huh? You did a quick scalp there, Hoover? Nice, nice. All right, we're still kind of just there, man. Like it hasn't filled it, but we came in to kind of try to attack it again. It's been trying for a while here. Still nothing though. And then market net flow, it's starting to get some convergence here as the cumulative net premiums for puts is really starting to diverge from the calls. 503 on SPY is going to be the level that we need to overtake. There's kind of a little call wall there. If you look here on, okay, 503 is the magnet here on the shorter time frame, but if I look at the strike, 503, it can repel price. So as price is moving this, like we're at 502 and 83 cents, it can repel price away. So if we can get above it and hold, it can propel price up towards it. Okay. So a little bit of a sticky area there. We have about, there's quite a bit of contracts up here. We're talking like 300, 400, another 300, another 300. So, over 1,000 contracts overhead. It's not a small amount. What's up, Trader Joe? Welcome in. Have I tried TraderLink? No, I'm unfamiliar with TraderLink. I'd have to check it out. Oh, I'm still in my rocket ship. My bad. I always forget. I'll get into the rocket ship later if we break it. Or should I get back into it right now? I don't like jinxing it. All right, I got to check in on my position. I've literally just been long all day. So since the low of the day, or near and around the low. And no, it's not that I timed a period of support. I just played the earnings expected move. Or sorry, play the weekly expected move outside the low of it on that strong move to the downside. The strong move to the downside with no market net flow joining that kind of move, it just kind of gave me the insight like, hey, like this could be an area where we bounce again. And so I faded it and got lucky, right? If it kept on going down, I would have just got out and lost money. But don't overthink it, you know? Come on, man, load in. I can't even load into my account. It ain't working. Here we go. All right. They filled it. Now let's see if demand continues. Demand continues. If demand continues to press here, we can go right back up to our daily expected move, kind of where the open was. They got that supply out of the way. Look at the volume that steps in on that move. That's what we call a buy stop pop. Oh my gosh, hold on a second. All right. All right, so nice little pop there through that. Let's just check in. Got the convergence there. We're probably above 503. Look at how we got above 503 and it propelled price forward. Let's go. I can't get into my account. Dude. What is going on? Dude, what is going on? This is BS. Oh my gosh. You gotta be kidding me, dude. Give me a second. Why does this always happen to me? This literally like happened 3 times. And it's all been on my live streams. Give me a second here. I swear if it reverses the entire move right now, I'd be gravely mad. It's annoying that it kicks me out so fast too, you know what I'm saying? I literally can't make this up. Like, I just don't get it, why it does this. This is crazy to me. Absolutely crazy to me. I can't get into my account. Oh, finally it loaded. What the heck was that, people? Messed up, dude. Jeebony criminus. Sorry about that. That's wild. We are Legion. Oh, man. Unreal, bro. Okay, give me a second here. I'm going to reduce some of this risk here. Nope, nope. Oh my. You got to be kidding me, dude. All my settings are messed up now. Dude, okay. I just gotta close my position out. I just gotta close it out. I'm closing it out. I can't mess with that right now. I closed out of my position. That was annoying. I would probably have left some on up into the daily expected move, but it is what it is. It's giving me problems, so I'm out. Not going to deal with it. Very annoying. I don't even think it's the server. I think it's honestly my phone, because I'm on my phone trying to do it right now, because I logged in over here, but I just didn't have the platform ready. Okay. Where were we? You had to restart Chrome. Yeah, man. I don't get it, man. It's only been recently that I've been running into these problems sometimes. It's like, I've never had issues. And then all of a sudden now it's like, I don't know, maybe it's like, maybe my internet's getting bogged up or something. I really don't know. Whatever. It's okay. No, I wasn't. It was definitely not hacked. Not this time. Yeah, no, I can't trade on the phone, but it just, my computer as it stands right now, I don't have my laptop with me, and I would have executed it on there. So I had to like do it on here, and yeah, you're right. It's a big no. Okay, so where are we right here? Let's go, people. We're kind of rocket shipping here. It's a little late to bring in the rocket ship, but let's just do it anyway, because we got positive market net flow, right? We have convergence. We've been seeing that diverge more. Market moved up. We feel that liquidity. So we're going to just chill in the rocket ship right now. We have now some new supply added overhead over at around 50.80. Yeah, this is Bookmap right over here, Colby. Just jumped in some Tesla position. Nice, nice. Coins moving here. Market's moving. We have Microsoft basically flat to unchanged. Nvidia up about 2.6. Nvidia is trying to overtake these prior highs over here. It's kind of in this area of supply. So if Nvidia presses up higher, this can take out the high of day. Google, flat. I mean, a lot of these big names are kind of just flat on the day right now. Amazon is starting to move a little bit more out of this pivot and at a high of the day. So Amazon's, moving there. Meta's going to the high of day. This is a little tight contraction. So got a couple names here leading the charge. Let's take a look at the Market Watch tab. We have 61 advancing stocks, 40 declining stocks right now. Much more of the capital is in the advancing names right now. If you look at the heat map, you'll see why that is, because our larger market cap names, so we got Qualcomm, bright green right over there, Nvidia, Apple, Amazon, Microsoft is rather flat on the day, but a lot of green across the board. So this is a broad-based rally so far. S&P 500 sectors that make up, the 11 sectors that make up the S&P 500. We have that's XLK, so tech leading the way there. Down towards the bottom of the list, healthcare, utilities. Those are more defensive names. Those are coming off. I will state, though, utilities has been holding up actually pretty darn good during this market turbulence. I mean, we're sitting at highs of the year for, we're one day separated from highs of the year in utilities. So yeah, it's going to consolidate and pull back a little bit. This is, the stuff that happens. Energy up on the day slightly over here. IWM is leading the charge, but IWM is really just trading inside the prior day candle. Consumer staples holding up rather well too. It's just kind of butting its head on this, and we've, kind of flagging out here. Not far from the highs of the year here either. Sweet, you do all your trades on the phone. I know that some people do too. It's fine if you're used to it and okay with it. But sometimes if you have access to your phone and your broker or whatever, which most people do these days, but you can easily look at it too much and potentially overtrade, or it can cause that kind of effect with some people. All right, so we're consolidating this little pop up over here. It's still holding rather well. Positive convergence. I'll stay in the rocket ship. Where did we come to? We came to 50-50, and 50-50 is going to be that sticky level over here. All right, 50-50. You can look at the 0 date right here. 50-50 is the put wall. We're kind of right above it, right and around it, right? So that is now the focus of the day. And now if we start to press out further, we have 50-60, so 10 points higher, but then 50-75, which we said that could be kind of hard. That's up here. Like, yeah, okay, maybe you can get there. Maybe you can. Or maybe if Apple reports good and we don't get up there and we hang around here for the day, maybe this brings us up here if the market likes what it sees. Maybe that's what's going on. I don't know. Why are we rallying? Nothing good was said at the FOMC. It's the market digesting, doing what it does. You know, it's doing what it does. I will say though, he said that rates will be higher for longer, but look at the probabilities. They're saying back to September we'll have a rate cut still, one rate cut, but you know that's what the market's seeing. And then we have, I mean, be aware that we have a lot of data coming out tomorrow, an hour before the market opens up, and a little bit, and 30 minutes after the market opens up, and we have Apple earnings after the bell, and then after that we have, you know, before the open we have some nothing too crazy on Friday. Cheniere, Hershey's, Fubo, which is whatever. Man, Carvana, what a move in Carvana, right? It's faded off of its highs, but just a huge earnings gap. Like, yeah, up 30%. FSLY reported, I think that they got smashed. Yeah, they got smashed pretty hard. Down like 40%. Crazy. Etsy, I think, didn't they report? Down 14, 15%, well off the lows. But yeah, a lot of these names, man, they got cracked, co-racked. So XRT, let me see XRT. I believe Etsy is in the XRT. I thought it was. I don't see it there though on the top. Eh. Yep. Thanks, MX. All right, I'm gonna just check in on my other accounts here. So I exited. I wish I wasn't having those problems. I got out of my trade. Like I said, I would have probably held it into and around if we can go up a little bit, push further back up to the daily expected move. But a little bit hard for me to do that right now. So it played, in my opinion, I think I traded it fairly well. So I'll revisit it. If I show you the SPX, this is just for the day trade. I played in and around here earlier. Based off of this very aggressive move down, and market net flow was not really suggesting that was going to be the case. So I felt like we can see some strength from that area and come back into the weekly expected move. So I traded in and around that. Once we saw strength, I added to the position. And then when we came up here, I exited some of the position, which was right around here. And then I got hung up obviously over here, and I exited the remainder of the position. Just given the context of being on a live stream, and it was just a little difficult for me. So, but yeah, still positive convergence here. Market net flow looks good. There we go, people. There's our little pop, and we have some overhead supply right over here. We do got, look at the supportive bids coming in at least. There's some, you know, it's not a clear blue ocean beneath us. We have some support on this move. Some demand coming in. All right. That's positive. Positivity, yeah. Outside of 50-50 right now. So we're kind of in this like open gap. Maybe things change. Let's update it. Colby, good point there. I'll pull up that in a second. Let me take a look. I think the reason why the VIX wouldn't be crushing, if it's not, is also we still have a lot of stuff going on tomorrow and after the bell. So I don't even know what I just did right there. Whatever. Okay. I guess that is updated. Yeah, so we're back. We got to that 50-50. So we talked about that a little bit earlier in the stream if you've been here. So we can get up to around that 50-50. So there it was right there. Okay, we're trading just right around that range on SPX first, reported by CBOE. VIX. So VIX is coming off a little bit here on this move, but let's look at the daily. it is remaining elevated up in this area here, right? So I would say, yeah, I'd suggest that is correct. In the shorter term, it's pulling off a little bit. So volatility is getting crushing, but it could be remaining high because we, like I said, those reports are kind of just on the back burner here still. Alrighty, we're still in the rocket ship floating around, people. You know what that means. I don't know what it means. Do you know what it means? Oh, I don't know. All right, let me put them in. Market net flow, still good. So look at this. Did you see here now? This was showing us this entire time, right? And then all of a sudden we start to see strength in the SPY, which means convergence is coming, okay? We broke out of some key levels here. So if you're not looking at convergence, which is fine, you can pay attention to these absolute perspectives. We broke out, and you can see since that point, started seeing some strength. It's kind of waning over here, but it's still positive. That's good. I'm gonna look at the change, see if anything's changing here. 504, so we're right there at 504. That's the magnet. Okay, and price is there. It's right here. Oh, and there you go. Okay, 504 is what? The daily expected move. So if I didn't get out of my position, I would have probably exited more of it just right around in these areas. So I didn't get to catch that move. Is what it is. Is what it is. I didn't get to catch the full move. And who knows if that's the full move. It can go higher still, right? There's always higher probabilities that we break the upside. But nice move. Getting a little bit, so as we feel this, we're adding a little bit more supply overhead again, but still we have some positive bids coming in. Getting through this level really set the tone there for the market. But it's provocative. That's funny. Yeah, I'm live on TikTok, AR. Yeah. Really, AR? Been there? Damn, that's a while, man. That's what's up. Am I coming back down to earth? Right now? No. Right now, it's pretty strong flow. So, yeah, I think it's possible. But right now, we're kind of in and around the daily expected move, getting outside of it here slightly. So this is probably, I mean, this is where I'd be like, okay, if I was day trading and I played it outside of there, this is where I would look to get out some more of the position. But I'd still leave a runner on, something like that, because we're showing strong positive divergence, positive convergence. Because it could go, right? It can keep going. Ain't nothing stopping it right now. We're moving, man. And we're getting support beneath us while it's going. Why not? Keep it going. Kind of upsets me because of the login issues, but you know, like I said, I'd be too focused on that right now. So my other portfolio gets the benefit in it. My shorter term one, I just got to be happy. I got to be happy with what I got, you know. Is what it is. Because I am net long right now. I mean, I'm rarely ever net short, ever. So, okay, back to market net flow, people. When you see it like this is like this right here, that's your edge. That's the edge when you have this bullish divergence, you have convergence. That's the edge to the upside telling us that dealers, you don't want to fight dealers. So if you're trying to fade this move, that's where like you can get lucky and it could pull in a little bit, but even pullbacks, they can be sharp and short and then rip up higher. So fading this doesn't make as much sense as fading the move from the morning. Okay? Why? Because this move over here in the morning down to the weekly expected move, what was market net flow doing? it was not a big red bearish convergence. It was actually bullish for the most part, but just no convergence. Now, if you're trying to fade it, you're literally trying to fade bullish convergence, bullish divergence. You see what I'm saying there? So look at strong move. And now it's pulling in a little bit. So we'll see. Let's watch to see what happens. And where are we? We're right here back to where the day opened up, right back to the daily expected move. If we pull in and you're like, hey, can I buy this dip and it's going to stay in bullish convergence, perhaps look for 50-50 if it's going to come down there. Okay, that would be the level that I'd pay attention to on a pullback. But we'll see. Yeah, I'm using Bookmap on a Mac right now. Yep. Bookmap on a map. Bookmap on a Mac. Bookmap on a Mac. All right, let's go back in. As we're pulling in a little bit, we'll go back to the regular view. And we'll pay attention to see if price can come back into around 50-50. Price came right back into the daily expected move, right? The implied move for the day. It's trading perfectly around these levels. Getting a little added over here. They're adding a little liquidity over here. I might actually look to play 50-50. A little bit, maybe. I don't want anything to damage what I've already earned for the day. Oh, my short-term account, I'm up $600 for the day. I'm not gonna mess with it. That's just that account. I'm gonna keep it as is. That's like a couple weeks of groceries. I want that. I want that. I don't want to get greedy. The bubbles. The bubbles are volume. Cumulative volume. So if it's green, it's like positive volume, red, bearish volume, right? And then the size of the bubbles show us how much the orders were within that area. And you could go to the very small ticks or, minutes or whatever the case is on these, but it's a volume. The orders of the orders. Boom, 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 boom. So you can see when it filled these orders, that open orders here, they were bigger. Boom, 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 boom. But now, look, what do you notice? Those were bigger orders on the way up, and then the pullback, they're actually, well, some decent sized profit takers, right? But it's actually kind of just smaller bubbles pulling back down. All right, I want to see if we're pulling into 50-50. Yeah, almost there. See if it does anything around 50-50. Hee hee. Does it move? Does it go towards or away? So Craig's asking about Bookmap, the red. So think of it as a heat map, right? So red means more orders to blue means no orders. So it's all progressive as far as the amount of orders. So yeah, price does move to these levels. Price moves in and around these levels. But remember, look forward. These were already filled. So this whole thing was here at that time in history, and then we filled it, right? It was they stepped it down. These were the heavier orders right there. And yeah, there are areas, just think of it in terms of supply and demand. And it's an auction, right? Look at, if I'm like up here, I'm like, hey, I'm trying to sell my can of tuna for $5,000. People are like, yeah, I'm only willing to pay, $4,000 for it. And I'm like, no, I'm not willing to give it up. So the people are like, all right, whatever. They look to buy it. They look to buy it cheaper, right? And if they're not willing to buy up here, price is going to go down to where there's going to be a buyer to buy my can of tuna for less. Okay. But maybe tuna becomes more valuable and eventually people are going to want to buy my can of tuna for $5,000. Are Apple earnings already priced in? No, they're not priced in. Sorry, I didn't see that. Yeah, Apple earnings aren't priced in, man. You can look at the expected move for, what the heck? What the heck happened? Reload bookmap. So Apple, this is the earnings expected move right here, upper, lower, right? If I go to the trade tab, you're looking at a $6.89 move, 90% implied vol. So yeah, no, it's definitely not priced in. It's going to probably come to one of these levels or more if it's a multiple, you know, if it's a shock. So yeah, no, it's not priced in. They have to report still. Market has to respond to that. Yeah. What happened here? Let me pull back on my stuff. Tuna's not a good example. No, it's not a good example. No, it is not. Okay, so it didn't quite pull down to 50-50, but it came to and around there, and then it kind of bounced up. So we'll see if it does anything. Market net flow still bullish across the board there. And they are adding a little bit more liquidity back overhead over here. Okay. Yeah, Martin, the levels here on Apple is the implied move for Apple. Let me move this out of the way. So these levels here on Apple, 179, 160, 550 or something like that. If I go to my trade tab, I'm looking at the expected move, what the options market is pricing in. Now, it's only 10:30 Pacific Standard Time, so the market's not closed yet, so we've got to see what this is more towards the bell. So if I go $6.88 from where Apple is right now, right? You know, it's up into and around this range, like a little, you know, right around here. So activate drawing. It depends on where it closes. Okay, so this is the implied move for Apple. And it's a high probability we tag one of those. And if it's a shock to the markets, we can expand through those, right? We can cut through them. We saw that with Pinterest. Pinterest went through like a 2 or 3 standard deviation move. How was the earnings expected move? Came to it and then blasted through in the aftermarket session. Yeah, Tesla, I think I may still have some in Tesla. Let me see here. Yeah, Tesla's consolidating. It's at that big day, and it's kind of pulling in lower volume. So I think it's setting up. It could set up here in the short term. I'd want to see it break the high, obviously, of this to go to the swing high, and then you'd have a stop here, and then it's setting up at least a positive risk to reward. Be nicer if it tightened up a little bit more. But if you look at it right here, it's kind of the trading below the 5-day moving average. It's still up, but you can see it's kind of holding. So you got to see a pop back through it. And I'm looking at this, I'm like, oh, well, like it's holding this trend here too, still. So get through this, because there's a big air pocket right here. Yeah, so as far as that, so we still have positive convergence. It's waning a little bit here. And we clearly are getting hung up at the daily expected move. So that would have been a great area for that risk, understanding where the risk could be. I got out before then. I got out down here, as you already know. Oh, I'm getting uncomfortable right now. I want to go outside. I need some air, man. I need some sunlight. I'm feeling high and low. What in that and who? Too good. I hope somebody randomly just joined in right then and there and just like, dude, what is going on here? You should wait until you see my other green screen setup and my other camera. Oh, brother. All pineapple background, yeah. This is like a crypto channel after hours. Gotta have some fun breaks, man. Too much of a mental load sometimes. You gotta just like, whew. Are they doing that, Trader Joe? I didn't know that. Sorry, I just saw that. Just saw the comment now. Yeah, JD and Baba making big moves. Super beef, yeah. Do I have any thoughts on gold, Fizz? I mean, yeah, I can create a couple thoughts. Thanks, Dope. So my thoughts on gold is I think it might be contracting here. Now, I don't know if it's going to break to the downside or not, but very tight little wedge here. We broke out. Now, a little bit longer term. So if the dollar is going to come off, perhaps that does help gold if the correlations come back. But right now, it's just contracting here inside of this pretty large kind of distribution type day here, right? We can potentially call that a bear flag, and it broke down. So now it's just contracting. So I don't know, maybe it'd be something to watch. I'm not like hopping on board of this trade. I'm not going to. It's not my thing right now, but yeah, I mean, perhaps it's just setting up for another run here. Gold's hard to trade, man. It's like one of those things you just buy and kind of hold on to. Market net flow still holding up, just trading in and around the daily expected move right now. Did we come down to 50-50 at all? No, we came close to it. What could be a realistic upside target for gold? Man, honestly, it's too hard to determine like a potential target, right? Like realistically, it would literally, like, and that's the thing. It's like, you would just want to update your stops because it could keep going and going and going. If you create a target and say, maybe back up to the swing high over here, what's to stop it from moving further and further and further? So, I mean, you can do measured moves, right? You can be like, okay, this was a flag wedge, and I think I'm going to measure this pull out again and go like this. And then maybe 2,600 would be the, measured move. But what if it goes past that? So you can always, if it breaks from these levels, boom, say if it breaks out, you can have a stop here or a stop there, right? And then move your stops up. And as it breaks up, it consolidates and comes back down. Maybe it does it again. You can update your stop again and so forth. Because you're going to go through periods of drawdowns and consolidations and so forth. So targets are always difficult. I mean, we have people making targets for 50,000, right? We have people making targets for 3,000. Just, they're everywhere. Hit the like button, rent is due. Open interest and volume data. I mean, I look at market depth, and then I look at gamma levels, and I watch volume. Like, this would be considered some volume too, like volume that's maybe unfilled volume, but then you have volume underneath us, and then all these dots represent volume too. The size of the dots represent volume. On my charts, I have volume. I look at volume profiles sometimes on the smaller time frames. I'll get too into it. And then I use anchor VWAPs. Anchor VWAPs are, volume-based indicator too. As far as just like straight open interest, I don't just look at just that like open interest level. I'll look at implied volatility, stuff like that. Yeah. Yeah. All right, we're just consolidating up here by the daily expected move. Honestly, though, when you look back to the left of the screen, we're not going anywhere yet. I mean, this is just kind of like a choppy sesh, right? And we're under the 5-day moving average. So let's reiterate this, people. We are under a 5-day moving average. It's flat to up, so it's like bearish, but bearish with caution because we can rip it through it. But then you add on the element that we're actually in negative gamma territory too. Okay? So you understand, I'm a swing trader. I play breakouts and stuff like that. This is not the market conditions for me, right? When we're in negative gamma and below a 5-day moving average, like for example, in Discord, if you're in the Discord, you probably notice I post way less trade ideas when we're under these. It's because there's typically way more false breakouts, right? And they come back in, and it's really more about just managing kind of like impatience and being like, there's still good setups that come and go, right? Like, for example, like I wouldn't mind trading RMD, right? Let's go to RMD, right? RMD right here, it's hanging out, flagging right here. Nice little tight consolidation, flag, bullish earnings gap. Yeah, I think that this has the potential to go up further, right? I doubt that this right here is the all-time high, or the high, not the all-time high, but the high is going to be within this earnings move, okay? So yeah, but understand that, negative gamma, it doesn't affect all stocks to the same extent, but being under a 5-day moving average for the S&P 500, being in negative gamma territory for the largest products out there, they pull weight on the market, right? So that's what I mean by market conditions can change. I become a little bit more aggressive. I might do fading. I might do more intraday trades and so forth. So when that changes, I go right back to it and right back to it and right back to it, and I'll start going again. But this is how I manage to keep my equity curve in decent condition in times of higher volatility. That's how I do it. My favorite stocks to swing trade, I'll swing trade whatever, man. So basically, any stock that has probably more volume than preferably $500,000 of daily volume, not $500,000, 500,000 plus of daily volume. Typically, I like more than that. I'll scan for under. I'll scan for 200,000 plus. Typically, every once in a while, something smaller comes in. But I like higher volume names. And if it's a stock that's in a positive trend that's contracting, I'll swing trade it. And then I do my diligence at that point. I'll look at like trend. I'll look at volume. I'll look at the pattern or the contraction. I'll see if it's like a very liquid name. I'll look at bid-ask spreads. And then I'll look at, the beta of it is incredibly important, right? Because a small move could be very dramatic in a high beta name. And that'll help me kind of adjust positions and so forth, you know? Oh yeah, I see it. I'm gonna have to check that out, dude. Trader Joe. To those two links I should post are what they do. Interesting. Oh, for upcoming earnings. Okay. Yeah, look at this. Not surprised. What does that service cost, dude? Do you know? I mean, I still pull it by myself. Or is it just free service? That'd be kind of cool. I'd still have to double check, but... I want to look at this other picture here. Oh, it's the same as TradeETix right now. Wait, TradeETix has the expected move? Huh. Wait, why did I just open up a Spotify thing? That didn't make sense. Oh, I opened the wrong link. That's why. I keep on opening the wrong link. Sorry, guys. Sorry, somebody's visiting our house. Oh, yeah, I kind of see that. That's cool. That's a cool little thing. All right, give me one moment. Got a crazy dog when people come over. She's gonna bark right into your ears right now. Do it, I dare you. She's very mad that the market's up. Short it, short it! Somebody's asking in my Discord about the correlations with the dollar. I mean, the dollar, he can't join in right now, but let me pull it up. But the correlations I showed were 15-day, 30-day, 90-day, 120, and we were thinking about dollar coming off, which could correlate to an up market, and that's what's happening right now. So let me just write that out to him. Give me 1 second. Check this out. Okay, give me a second. I literally have these permalinks to some of these charts in my Discord that you can always revisit. So on my stock market brief shows, I add these, some of the charts that I use, the ones that I actually use. Like, for example, I have all the dollar correlation charts here. So let me just copy this. Actually, let me copy message link. Where did he post that? Here we go. There we go. Cool. Yeah. So yesterday we talked about the dollar coming off a little bit. If, we were looking at the yen and the dollar correlation and potential the intervention there. I'm no expert in these foreign currencies. I don't pretend to be, but I look at intermarket stuff and I look at the visuals, and what the visual tells me sometimes can determine something that may happen. And we said, okay, this is unnatural behavior, right? This right here was unnatural behavior. This right here screams intervention, okay? Because the Japanese yen has been getting crushed, and I think people should be paying attention to it. And what that means here is if you're selling dollars, buying Japanese yen, right? And this is putting pressure on various pairs. If this goes down, this could tell us, obviously, that the dollar is going down in, according to the Japanese yen, right? Paired. But if the dollar were to come off, we were talking about the correlations, the other correlations. So if they are sellers of dollars, if the dollar is going to be pressed down, that could be beneficial for the S&P 500. And we didn't just say that, hey, it could be beneficial for no reason. We talk about it because it's a correlation, okay? The chart itself, you can look, give me a second. This is the correlated chart, right? So you have 15-day correlation, 30-day correlation, 90-day correlation, 120-day correlation down here. And you have this line, it's bizarre. When it's above the line, there's a positive correlation. I mean, if the dollar goes down, S&P 500 could go down. But they're all negative, right? Here, the 30-day is negative, the 15-day. So this was telling us that if the dollar go down, S&P 500, don't rip your face off. And we also note a couple other things, like you put them all together. It's like puzzle pieces to a gigantic puzzle. We're below a 5-day moving average. We're in negative gamma territory. These are all concerns. And not only that, we were there at the weekly expected move, the lower expected move. So if the dollar were to come off, it just made sense that we can have our faces pressed up higher today. So we sold off into the morning after a big gap up. Market net flow the entire day didn't suggest that to be the to be the reality. What is going on? What is going on? I feel like I'm playing old school Nintendo games here. It didn't suggest that that was like a viable move. So it could have just been early morning dumping into action. And so that's why, why I personally went to trade long into and around these levels. And now we're just consolidating, contracting up into this upper daily expected move. Hope that helps out. Okay. But we're still in negative gamma territory. We're still below a 5-day moving average. Right? I wouldn't be confident. I'm not confident that this is going to keep going higher. The market's acting very efficient right now. The only thing I'm confident in is managing risk, because that's what I can control. Yeah, feel me? Yeah, it takes pressure off of bonds. Exactly. Over here on, Stick in Nader. Yes, first time chatter. Yes, it takes pressure off bonds. Exactly. And we pulled that up on the chart. We looked actually at the correlation between the 10-year yield and the US dollar Japanese pair. And that's nothing new, right? There's always been a tight correlation there. Hey. Oh, market's moving. Coco, get mad. Hey. No! Attack of the killer dog. The TLT and TMF, I'm not much of a fan of trading them right now. I think that the 10-year yield still has potential room to go higher, right? And a lot of smart people say that. Stop barking. Hey. So if the 10-year yield's going to continue... All right, let me put her outside. Give me a second. Too funny. Dog's going absolutely bonkers. Coco name. All right, where were we? Alrighty. Market's still holding up rather well in this area, people. And market net flow, it's still holding bullish convergence. So just, we're back up to the daily expected move. So this is why I kind of said earlier, you know, like, yeah, you can, get pullbacks or whatever, right? But it'd be looking to buy the dip than anything. Yeah, we'll take a look at Nvidia. Give me a second. I'm trying to look for my tickety-tockety. Where did my TikTok Snapchat or TikTok chat go? Oh, there it is. There we are. There's my TikTok. Net market flow, I'm using Trady Ticks. So you can also look at it if you're in the Discord. By typing in the query channel, you can get it automatically updated there. So yeah, market net flow is a huge thing, man. If you're trading intraday, it's just a massive tool. Keeps you from doing stupid stuff. Okay, Nvidia had been mentioned to pull up Nvidia. Two standard deviation move today in the S&P 500. We're pretty far off of that right now. But where is it? I'll give you the exact level. Let me check my Discord. 507.87. Way up here. Yeah, I don't think we're going there today. Although maybe on Apple earnings, if Apple reports right, you never know, right? Who knows? Who knows? I can't rule anything out these days, apparently. Okay, yeah, Nvidia. I mean, Nvidia's still holding up rather well here. It's just an inside trading day, though, so price moved down. It's contracting. 15-minute time frame. We're below a rising 5-day. You want to get back above that, and a little. It's getting tight here. So if you are long it, where do you put your stop? Maybe under here, which is the day low. Maybe it's under here, or maybe you're doing a 50% stop. Maybe a 50% stop here, maybe in 50% here. So if you're stopped out, maybe you still have 50% of the position if it turns back up. Or you can even get tighter, right? Stop here, 50-50, or just 100 or 100 here. So that's how I'd approach Nvidia as it stands right now, right? I mean, this doesn't look bearish. Too bad, right? This uptrend right below it, and we're seeing a series of higher lows into this pivot and around. What is this, 855-ish? So if we break out, I mean, like the next level would be to check this as gap fill, right? Sure. And then over that gap fill, right, obviously we have more of a point of control up ahead. It'd be more like 872. Don't look bad, right? And if we can stay in a positive market net flow, that's a good sign. No, this is not, I'm not looking at Carvana. This is, I looked at Carvana a little bit earlier. Squeeze on oil. Is it good, man? Because I have an oil position on right now, or a trade on energy names. Wow, you're not kidding. That was a pretty big move there. Hey, you're on top of that. You must have been watching this closely to call it out that quickly, FT. You're trading it, aren't you? Yeah, that was a lot. That was a big order. This is a 1 minute bar. Just for you guys to know, like this is not a small move in oil in 1 minute. If you're trading futures, that's crazy. That's quick. You're welcome, Brandon. Get out of Tesla for a bit. Tesla, I don't know where the entries were or everything. I mean, I'm just looking at this trend right here. I mean, it doesn't look horrible. It's below the rising 5-day, and it's kind of like grinding on this like thing. So like it feels like it can crack down or crack up. It's like at that kind of like very critical level. But when I look at the daily time frame, yeah, the bulls that stepped in from the lows, volume's been drying up. So big strong move, and it's kind of just grinding lower. So if we start breaking above the high of today, I mean, I think it opens the door to back up. This is what I like to see. I like to see these periods of contraction, right? I don't chase this move. I wait for it to consolidate, right? Or, you know, digest. Oh, wait. When I look at Tesla, we got to be in the Cybertruck. I always forget. We got to be in the Cybertruck when we look at Tesla. ENVX is squeezing. ENVX is a, squeezy name, that's for sure. It's earnings. Yeah, earnings cause it. This thing's all over the place, man. I've traded this a few times. Nice little move through here. Yeah, nice little move. I mean, daily time frame, though, it's kind of all over the place. A bunch of pops higher, and they got faded. So we'll see. I know there's some big-time bulls for ENVX. What's the ticker on oil? Well, it depends on like crude oil. I mean, you get like it depends on the platform. I mean, you probably some might be WTIC, right? Or if you're trading futures, it could be /CL. If you just like you can look at XOM, you can look at XOP. Like that XOP is the S&P 500. XOM is a name within the oil industry. XOP is the S&P 500 spider oil and gas exploration. So, I mean, this one probably saw, that move too. You can look at energy like XLE, that'll have some oil names in it. It's holding up rather well. I took an energy position last night into the close because it just sold off hard, and I thought that we're going to see a bounce. So it's just being tactical within this environment, right? I do have somewhat of a natural gas position. Somebody mentioned Natty G bouncing off. Nat gas, I don't really trade, but because I don't know how to. It's crazy. Nat gas moves like crazy. But, LPG, I think has to do with, and this is a position that I have, has to do with some natural gas stuff. But I just like more from a technical perspective of how it was setting up and kind of getting tight here and breaking out. I was trying to swing it up higher to the swing high, see if it does it or get stopped out, whatever. Ooh, whoa, whoa. Coco's in. No. Yeah, so we pressed up higher right over here. 5090 now has that little area. It's interesting. So as we're pulling outside of the daily expected move, market net flow is still suggesting a nice move here. Ugh, man, I hated that I was having problems earlier. Oh my, what's it called? 5075. I mean, we might get to it. 5075 was that focus. It was the focus from earlier in the trading session from a call perspective. Let's see if it's changed anything and became bigger. Yeah, 5075 is the focus still. That'd be a crazy move because I didn't think it would get up there. But yeah, then again, what I think doesn't matter. It's what the market does. And when we're in positive convergence like this suggests that we can keep at it. So 50.75. Sure, why not? Got to get through some of these levels though. We're about 2 hours to the market close. I think I'm going to call it quits for the trading live stream session. I've been live for quite a while now. I want to go get some air. You feel me? It's been a minute. It's been a minute. It's been a good Thursday. It's been a good Thursday. Trading outside the daily expected move. We're pulling into and around the week-to-day anchored VWAP. Those can act as levels of resistance. We're still below a 5-day moving average. That's inclining, so bearish with caution. And we still remain in negative gamma territory. This is where you can get rips to the upside and rips to the downside. Back and forth price action. Apple reporting after the bell. So we're going to go over to the Apple chart over here and go like AAPL, just like this. And we're going to go over to the trade tab and we're going to go see $6.92 expected move. That means implied volatility is rising as the market's pressing a little bit higher here. What did I say it was? I keep on messing it up. Yeah, 691. Ooh. Ooh. Ooh, yeah. All right, so where price is right now, that's about like that. That's the earnings expected move right now for Apple. But there's still time for the day. So, you know, it may change a little bit, but practically this is where we're at. About 180 down here to 166 roughly. You know, if price comes way down here and closes down here at the low day, these would, you know, adjust down a little bit lower and so forth. But that's kind of where we stand right now. That's all I got for you on today's episode, everybody. Dope Gains, thanks for being out here and chatting up in the YouTube, man. I appreciate the engagement there. Mike Moore, thanks for being here. Old Testament, always thanks. Craig Taylor, thanks for being out here. Market Flow, how's it doing for the... what is Market Net Flow doing again? How much is it for the service? Market Net Flow, it's not just for this. It comes with a lot of stuff. It's like 60 or 70 bucks a month. If you like Market Net Flow, just this alone, let me hold on. So in the Discord, if you're in the Discord, this right here, you can pull at any moment in the query channel by typing in the quote code. What is that? What do I mean by that? Like, right? Okay, I'll just show you. Let me go to the query channel. Give me a second. This is, you know, $9 a month. So it's a little bit cheaper, obviously. Okay, so here's the query channel. Dude. Okay, so in the Discord, right, these are the channels, right? This is all the Tradie Tick stuff right here. You have the query channel. The query channel, you can go ahead and like see this guy. He typed in the TR net flow for the Qs, and he pulls up this, and it shows the momentum. It doesn't show convergence. It shows momentum. And all convergence is, it tells you whether or not the S&P 500 is moving with it. And then, you know, it gives you GEX level. Like you can just type in a command, and it brings up stuff. And market net flow is part of that. And that's only $9. But if you want like the more detailed, all this stuff, Tradie Ticks is like 60 bucks a month or somewhere around there. But like I said, I have the Scout bot. I have Bullseye bot, Trading Flow bot, Large Sweep bot, Golden Sweep, all that stuff that was in there for $9 a month. And then if you want like, you know, more stuff or whatever to see it by yourself or whatever, you can just get Trading Tick service. And then, yeah, obviously I have other stuff in there too. It's not just a Trading Tick service that I do, but yeah, that's all I got for you, everybody. 69 Conquer, thanks for being here, man. Till next session. Reaver, you're welcome. FT Trader, man, thanks for being on. Trader Joe, appreciate you. Appreciate you. Moonraker, obviously, thanks for being here, man. Zulfi, thank you for being here. Craig Taylor, thanks for being here, man. Yeah, Craig Taylor, it's $9, and then so you sign up through Patreon. Like, there's a link. I have links everywhere. It's like patreon.com/figuring out money, or go to one of my YouTube videos. There's a link there, in like the pinned comments or whatever. It's not an alert service. Okay, you can sign up for a year. If you sign up for the year, it's like 16% off, so it ends up being like $7 a month, and you're just in there and you get all this stuff there for a year. Okay, it's not an arm and a leg, dude. It's super cheap. It's very cheap, inexpensive, but I try to provide a lot of value. All right. Ari, thanks for being here. Vladimir, thanks for being here. Shan, thanks for being here. Mario, thanks for being here. Everybody out there on TikTok, thanks for so much love out there. TikTok, always. EJ, later, man. Palm tree, later. Feels good. All right, I'm going to sing you guys a song goodbye. Goodbye. Goodbye.